Hello everyone, welcome back to our Lumley trading live stream. Today is a big move. We have Cvna moving up off their earnings, up 30% currently at $56. It is actually moving crazy. Pre-market highs at 59.30, so we'll see how it can start reacting as we push higher. Again, from a deviational perspective, this stock is extremely overbought. And we never normally plot out the fourth deviations, but in this case, I think it's going to be justified. But we have that at 51.45, and we do actually have one above, which is at 58.25. So they're the only other two levels we can really use, which are kind of near to where we are now. And actually, now looking at that, here I'll put it on the screen. Now those fourth deviations make a bit more sense on where they're reacting. It picked that highs, grabbed kind of this low, and again the final level has kind of acted as those resistances. So we'll see how it starts to react as it comes up. The way I think I'm going to trade this is going to be short bias. We can see how volatile it is today. I think I'm going to go in with some defined risk plays, shorting as we come into the 58s, and if it does break again, it's defined risk, not the end of the world, but if it does start to pull back, we'll probably be in the money pretty quick. So that's probably how I'm looking to trade those. Again, if you want, check out Discord. Again, always free, it's in the description. We do also put our trade ideas, because again, we did actually mention about the Cvna. We put this up last night because again, if you didn't know, Cvna did move their earnings unexpectedly, so we always post things in there like our trade plans. So yeah, that was quite key. And again, we do after the hours today as well. We do also have big names coming out. We've got Tesla and Netflix coming out after hours. So again, should be other key news. So it should be all good. We just had an alert go off. Let me quickly check what that was. We've actually had 3 go off today. So we've had Unity, UNH, so United Healthcare, and Cvna all go off today. So let me check the Cvna alert. Okay, it's because we're breaking down. You can see we're really cracking down again. Super volatile today is what I think I'm gonna get the option plays, because there's just, if you get in the direction right, it can be great, and if you get the direction wrong again, you know what you're gonna lose. Looking at the supports then at $45. What I am also liking the look of, let me quickly add them back onto the chart so I can show you key levels I want to be paying attention to in case you missed the Discord or the stream. And that's paying attention to these levels here. So again, if we start to sell off, if we can crack these third devs and our second, so again, it's going to require quite a big move, but when we can, we got the anchored VWAP lining up with a deviation, and we got the anchored VWAP lining up with another deviation. Again, this blue anchored is since the previous earnings, and the purple anchored, this is just really from whatever catalyst this was, where volume started to increase, and this is where kind of this more bullish move started in general. So really paying attention to that as well. But everything's looking quite nice. So Cvna is, yeah, putting back pretty big. I think that's going to be the main watch really for today. Also want to quickly point out, and we'll actually put Cvna over here. Put Tesla over here because it should be bigger names. When we're still short with the BBIO from yesterday, we got that around 35.50, down at 32.90 now. So we'll see if this can continue to the downside. T-Mobile as well, we covered this when it was down at those lows. It's starting to pop up 7% or just under 7% today. So it is moving quite nicely. I think we might actually put Cvna in that corner, just then it's easy to kind of see, at least from where I am. There we go, should look all good. And so they're the main things I'm paying attention to as of now. Let me know if there's anything else to have a look at. Fubo's up just under 5%. Unity, again, the alert went off, so let me quickly check what that is. So we are breaking up. These levels have slightly moved, so that's now 51.75, and the 1 year is at 51.90. So you need to see a bit more of a move. We need to kind of break this $50 level, and then, which I mean, we're kind of testing now, so we'll see if we can break this on the first push. But if we can, coming into around 51, actually I can, yeah, if we come into 51.75 and 51.90, those are our third deviation. So they're going to be those key levels if we can continue to the upside. So I'm really paying attention to that. And Unity, I know was that UNH was the other alert that went off. UNH coming into its actually second deviation on the 6 month. That's at, let me get the exact level, 115.35. So let me throw that on there as well. So yeah, not too far off that. Definitely going to be throwing an alert out because that could be a key opportunity if we can actually push to that. And if we do break that, we do end up having 522.40 is also our second deviation, but that's over on the 1 year. So it could be another key level if we can break out to that as well. So probably have an alert. And I'll probably look to swing trade these short. Again, probably not going to look from a day trading perspective, but these have been really profitable from a swing perspective. And I can show you actually exactly what I mean by this. So if we zoom out, what I like to do is keep the levels there basically. And what we can see is, so the previous time we came into that range, you can see this wasn't a clean one, did provide a bit of a bounce, and we might have got out some there, but if not, probably could have got out break even. Or again, if we were really late, maybe a loss. And then the other one literally hit to the penny, and then that was the overall reversal. So been quite clean so far, so I do like the look of UNH if we can continue to push to the upside. Down on the day, markets are looking quite strong. Don't have too many big names down on the day. The biggest one down I can see is NCLH, so Norwegian Cruise Lines. But again, overall still very overbought, just a bit of a pullback as of right now. But they seem to be the key things. Again, I'm going to be watching Tesla and Netflix today, just because, again, they do have their earnings. So I think those are going to be the 4 charts I'm paying attention to. Cvna, obviously going to be a key one. Tesla got earnings after hours. Netflix also got the earnings after hours. And I'm keeping an eye on BBIO because, again, this was a trade that we put out yesterday and we are trading. Again, the futures actually look, well, I mean, everything's strong on the open, but the S&P futures, for some reason, just look a lot stronger than everything else. But the bonds and the dollar/euros are basically flat on the day. So we have that level has actually changed a bit to 7,860. So again, we can just have that Netflix level a bit more solid. So that's actually where it is. And we don't actually have too many levels that close to it. If we go to the downside, we have 159.90. So that would be our support on the first dev. And then if we break to the upside, our next resistance is quite far off at $509.30. So see if we can move to any of these. I mean, we'll probably have to wait until the actual earnings release on Netflix to see that kind of move. BBIO, just to have a quick look from the intraday perspective, coming down to basically retest its third deviation on that 6 month. But again, we are extremely overbought. We would expect it to basically start cracking down below that level. We'll let some of this news play out for a bit because I've got some things to do. But again, the key things, just Cvna, Netflix, and Tesla, I think are going to be today's watch.
This weekend on the burlap one, but this is a really terrific deal because this is a company, a beer company, in desperate need, I think, for direction on whether to spend the money on Victoria, premiumization of beer, whether they should put their money on Pacifico, the beer that the 27 to 34-year-olds want to know. Do you double down on Modelo? Do you try to get into convenience stores more with Corona Extra? Or do you go for the tap now that Bud Light has had such a hard problem?
What do you make, though, of Elliott's involvement here? And
they recognize that the cash flow here is outstanding, and it's been frittered away.
You know, this has also come up occasionally as a potential, given, again, one class of stock. Would they ever sell it? Now, that goes back to our larger discussion about mergers and how difficult certain things can be.
I don't think that
this, by the way, was a huge beneficiary of antitrust action.
They got the Modelo and they got the Modelo franchise and the Corona franchise when the Bud deal was done.
The divestiture was forced upon Anheuser-Busch.
But I think when you look at the merger guidelines, the opportunity of Constellation Brands merging with anyone other than my mezcal group is inconceivable.
I could put a deal together for you. I got some friends. You know?
I know you've got big friends.
I got big friends. I'll write big checks for you.
I listen to the people he talks to. He talks to the who's who. I talk to, Schleppers.
You talk to the what's what. I talk to the who's who.
Okay, there you go.
Next thing you know, you'll be riding your motorcycle in Lake Como year-round, Jim. We will miss you.
Or I could ride my motorcycle in Silicon Valley and be Jensen Huang, too. Smarter than ever. Constellation, very good opportunity to own. I screwed up on J&J. I did not screw up on Constellation.
Jim, in terms of broader market, yesterday we did get yet another increase. Credit Suisse goes to 4,700 year-end. Goldman cut their recession odds this week.
Wasn't that
Atlanta
something?
Fed's looking at 2.4 on Q2 GDP. What is in the way?
The only thing in the way would be some sort of shock. I hate to use that black swan stuff. That's like all these really smart people that don't make you any money. I find them to be invaluable for nothing. But I do think that if inflation were to go the other way, I think that you would see a lot of these companies reverse. I don't see any of the majors. I don't see a ServiceNow doing badly in soon. I think that Salesforce is having a great quarter. Could Amazon disappoint us? Not this quarter, because it goes say next quarter. Alphabet's put together a pretty cogent group of...
Actually cut some size out on the BBIO shorts. Again, they're long puts. Just because they're up from, again, when we got in, they were literally $25 a contract, already up to $40 a contract. So just scaling out some. We'll look to get back in, probably if we can get a bit of a spike up back to around 34.60, where you can see the anchored VWAP is, then I would be quite happy to get in a bit short again.
This was that moment when,
right.
when pickleball, and it's so absurd, but I mean, the pickleball was spiking the...
No, but the move in these United Health, as you point out, right?
United Health
up
did not
another
have a problem.
2.5%. The
And today
healthcare group has been taking off.
And today Elevance said
Right.
it's not a problem. So this is a group that's come back from the dead. So I find these groups, don't forget the industrials are doing incredibly well, and they're going to benefit from all the infrastructure money. Look at Caterpillar, which bears were saying at 206 was about to really, have one of its 9 lives shorn. And here it is up at 261. And they're sold out for everything involving infrastructure. Everything's I-95 in Philadelphia, as far as I'm concerned.
We haven't mentioned Cisco up to
about that
JP
upgrade?
Morgan. They go to 62.
Nice.
Jim, it's had trouble getting above 52.
Well, people feel that they have not benefited as much, and that the Mellanox acquisition that NVIDIA put together kind of boxed them out. But I think that Chuck Robbins is telling a good story. There's a lot of business to go around when it comes to what?
Jim, the lead story in the Journal, tech stocks are rising manically, spilling into meme stocks. The cryptoverse is enjoying a resurgence. The market looks a lot like it did in 2021, right before stocks entered a deep slump. That's the Journal's lead story this morning.
Well, aren't they just a little ray of sunshine? Yeah. Look, if your job is to keep people out and not allow them to make money, the Journal's been very consistent. And I think consistency is a remarkable hobgoblin.
Yeah, it was a different stage of the rate cycle and the inflation cycle, that's for sure.
Look, we see a big flare of inflation. These stocks all turned their direction when we realized that inflation had peaked. That's all it is. They were going down, and most of these companies pivoted toward making money, the tech companies, where they cared about was great growth. And it's been a remarkable transformation. I mean, I want to poke a hole in it. Every day I come in, I thought that Goldman might be a great place to poke a hole. It didn't allow you. I thought that Gorman, I did not think that Gorman in his swan song would come out and say, listen, things are really bottom. But he did. I mean, you're getting good commentary from seasoned business people. I struggle, David. I want to be as negative as the Journal.
Isn't a lot going to depend tonight on Tesla, whether it's AI, Cybertruck, deliveries, margins, and what Musk says about macro? He has not been a constructive macro voice.
No, he's not, and I agree with you. He's a wild card. But, he's in sell mode when it comes to this Cybertruck, and he's very bullish. What are you going to do, say he doesn't know what he's doing? I mean, look, I backed Ford, and what happens the same day that I backed Ford cuts price. They cut price. I mean, make it so that it's a. Can I have a 3 egg scramble in my face when I get in J&J and I put Ford 3 eggs, but make it Western omelet. How about a Western?
Hey, they can never take NVIDIA away from you. Never. You'll always have that one.
David.
No argument there.
Thank you.
Yeah.
Thank you, Dave. I'm feeling better.
You're welcome.
It's been a tough day. I lost Marley. Trying to do this.
Your tweet broke my heart last night.
But David just made me feel very good. You did.
Every so often that happens.
NVIDIA, of course, who passed away a couple years ago, but was really just a fantastic dog. A month, by the way, from the Tennessee Kill Center.
It's tough
I'm
stuff.
not in that breeder nonsense. What the heck is that about?
Still to come this morning, as David said, the FTC chair, Lena Khan, on her new merger guidelines. The agency, the DOJ, what they released this morning. Activision's Bobby Kotick on everything from the Microsoft deal to these quarterly results, as 91 cents does beat by 3. Bonds have given the bulls a little more fodder today. As we said, yields have been lower in the wake of some housing data that was relatively cool. Of course, we've got a lot more data coming up tomorrow. Back in a minute.
Okay, while I went on an ad break then, we check it out. Again, Tesla trying to fill that gap, it seems like. BBIO starting to pull back down again. I said we did get out. The contracts were up over 50% from yesterday, so made sense to kind of start cutting out a tiny bit. But if we can push back up to that anchored VWAP, looking to get that size in once again. And then looking at Cvna, seems like it's now hopefully bottomed or potentially bottomed around that 48. And so we can see if we can start pushing back to those highs. And then Netflix being a bit more flat on the day. You're just having the S&P and the future. Well, yeah, the S&P in general just starting to pull back a bit. So we'll see if that will come all the way back. Let me just quickly get the chat up on my phone. And there we go, then I can actually see. But yeah, strong open. Again, I think the main volatility, yeah, obviously Cvna's strong for now, or going to be the big name for now. But as soon as we come into after hours, I think that's when it's going to get a bit hectic. Normally it does around Tesla earnings time. We also have PBLA, which is the leading gap today, currently up 43%. So we can see what's doing with that. Oh, this was a previous mover. And the reason I can tell this is what I do is I change my levels, the way I color code them every once in a while. So I know if it's an old name, because obviously you don't automatically delete the level. So yeah, this level then was plotted in 2021. So this stock must have been a mover. Go back a few years. So actually if we zoom this out, I don't know, maybe we were playing it somewhere as a support. I'm not too sure where these levels were from. Unless it's had actually reverse stock splits from then, so might have been pre-levels, because I don't think your levels readjust. But yeah, previous mover nonetheless. Again, this, the data is still not been updated. It's had a reverse stock split. That's still down there.
Watch the theater chains today. JP Morgan does cut Cinemark to neutral. They were at 21, they go to 18. They do point out limited visibility given the pace of the strike and the lack of negotiations. The Times today makes the point that the two sides, as you may know, are quite far apart. Cinemark down 4%. Dow's up 150 though. We're back in a minute.
Never understand why they come back for those few seconds. Seems a bit pointless. Again, the anchor VWAP's coming up a bit. If we can push down, it's retesting that deviation. It's a lot clearer to see from a 1 minute chart. So I'll quickly throw that over on here. A lot cleaner to see from that 1 minute chart is, again, yeah, we kind of used this level as a support. We then get that bounce. We then get that retest. That's when you expect a break. Now we're retesting it as a resistance. Not only did you have the deviational level there, but you also had the normal VWAP. So kind of adding strength to that level. And now it looks like we could be selling off. So if we do, I am looking to take this long, $45 to $45.20. Again, this will be a day trade only. But considering you've got a deviational level right next to the anchored VWAP, should be a strong level. We'll probably look to have maybe a dollar stop on that. So obviously depends how much, if you're taking the same sort of trade, how much risk I want to have on it. But our average will probably be around 45.10, risking a dollar, probably $1.20 on it. So again, we'll see how much size we want to go in, probably just 100, maybe 200 shares. If we're looking for that bounce, we could look for definitely a few points, probably come into that resistance. So you can probably look for about 2, maybe just under 3-point move. So it could be quite nice on the Cvna move. Again, T-Mobile giving up some of those gains now, but still holding up strong.
Need prices.
Let's get to Jim and stop trading.
One of the reasons, going over what David said to me, which is true, what could destroy or bring down this market? I'm sitting here reading yesterday JB Hunt's conference call, and it's not good. The numbers aren't good. It's disappointing. Shelley Simpson, who's the excellent president, comes on and says, we are in a freight recession. So I figure, okay, well, there goes JB Hunt, right? Well, there goes JB Hunt. It's up 5. So the difficulty I have is that if you throw everything that you would normally short a stock on, Carvana, JB Hunt, buyers come in. This was not a good JB Hunt call. They missed the numbers. They're a huge freight company. So, David, my problem here is that even when they're bad, people want to buy. And so, Carl, it's a green shoots market, as my old friend Larry Kudlow would always say. And it is just, if you were negative on the market, it is very discouraging because the ones that should go down don't.
Yeah, imagine if we didn't get some of the new shares.
What does JB Hunt have to say to take their stock down? I mean, there wasn't anything on the call other than intermodal that was positive. It was really a disaster. It doesn't matter. Stock's up 5. Then 3 firms upgraded. It loved it. Okay,
so
tonight I've got Carvana, which is a classic case of so bad it's good, right? And I think Ernie doesn't. He's going to tell a very, very good story. Then Yunnan Cries, Monopoly. Barbie. The Barbie movie.
Baby. Got Barbie coming.
Now remember, they only make money. They make very little off the actual movie. They make money, of course, off the ancillary. But Yunnan Cries told me in 20, I don't know, about 8 years ago, that when he took over, he would eventually get in the movie making business because that's what he's in. And bingo, Barbie. Yeah, Barbie. What a show. I got to 1/10 of what I wanted to get to.
I know. Not done yet, though. Big hours on tap for the 10. FTC Chair Lena Khan, as we said, Activision's Bobby Kotick, 45.73, new intraday highs for the year. Don't go away.
Just noticed my mic was muted, sorry. I did say, yeah, 10 o'clock's coming up. There's no news dropping at 10 o'clock today. Coming into 10:30, though, you do have the crude oil inventories. That is one, you have that and the nat gas tomorrow. They're two trades I like to take. Again, they're not on the stocks, they're more focused on the futures. Normally a fading opportunity. So 10:30, I'll be looking to trade that, and then we'll see if we stay on the stream after that. We'll see.
We could stare at the stars and start believing.
2023.
Good Wednesday morning and welcome to another hour of Squawk on the Street. I'm Sarah Eisen here with Carl Quintanilla and David Faber. Live for you as always from Post 9 of the New York Stock Exchange. This hour, two massive interviews in the M&A world, including FTC Chair Lina Khan joining us first on CNBC following the FTC's and DOJ's brand new guidelines on mergers and acquisitions. And the latest from Microsoft and Activision from the man himself. Activision CEO Bobby Kotick joins David live from the New York Stock Exchange. Take a look at stocks here in the early action. Higher across the board. We're up almost 0.5% on the S&P 500, just adding to the gains on the week, now up 1.5% for the S&P. Today, the action is being led for a change by utilities and real estate. Energy is doing well. It's up more than 1%. Earnings continue to fuel the action. The only two sectors lower, information technology and materials. The Nasdaq's up 1/3%. We are 30 minutes here into the trading session. Here are three big movers we're watching. Earnings, earnings, earnings. Look at shares of Carvana this morning. The online auto retailer announcing a new deal with note holders to reduce their total debt outstanding by more than $1.2 billion. Plus, saying they plan to sell up to $1 billion in shares to shore up capital and restructure operations. The stock is up 35%. Chip maker ASML under pressure. The CEO there warning of a cautious consumer on the call, saying they expect a slower recovery than the street expects. And finally, we'll hit Goldman Sachs, latest major bank reporting results. Earnings per share misses estimates, revenue beats, stock is a little bit higher. And guys, this was kind of a messy quarter for Goldman as we were.
Cvna has kind of jumped back above that 51.45, so it looks like we're coming to retest it again as a support. If we can hold, then good upside. But again, if not, potentially looking at that 45 as a nice bounce.
We know about that. The Green Sky deal. And then, of course, there's the real estate issues with commercial real estate and others that he actually had warned about. If you strip out some of those items, the performance is actually fine. Look at the ROE, which is the industry, obviously how you measure it, 9.2%. If you take out some of those, ugly items and messy items, and that's actually higher than what Morgan Stanley reported yesterday.
Yeah, still 4% on a headline basis. Mike Mayo points out, second worst quarter since Solomon became CEO, worst non-pandemic quarter in 7 years. But they do say that even though investment banking performing at the lowest level in almost a decade, they feel pretty good about capital markets. The green shoot narrative continues. Feel good about headcount. Don't really see taking some major action on headcount other than performance-related measures. So maybe not quite the echo of Morgan Stanley beat for beat, but some of it.
But also the outlook is so key. And if you're talking about green shoots in the investment banking world, which we heard from James Gorman on the show yesterday, and some of the other banks have been talking about it, Goldman Sachs, and I expect you'll hear Solomon talk about that in the call this hour. I mean, they're a huge beneficiary of that. If the outlook is really changing and deals are starting to percolate end of the year toward into next year.
David's commentary to date, at least, has not been particularly optimistic, I would argue. I think
on the economy.
On the economy broadly. and even specific to the business of Goldman Sachs in terms of, I mean, they were a leader again in M&A advisory, but obviously there wasn't that much M&A to advise on. We've talked so often about the lack of IPOs. We've started to see an opening of that window. But generally, yes, he has not been positive as others, perhaps, on the economy. Even his own economist, Jan Hatzius, has been more positive, on the chance of a recession.
Which he talked about in the last interview a few weeks ago with me, Solomon, and he said, well, Hatzius has been right. So maybe we can get away with a soft landing here. But so far, the comments coming in from the CFO on the call are that specific to investment banking, and we're hearing this now as a theme, they're starting to see some action that, bottom is a strong word, but that there's some light at the end of the tunnel.
I'm hearing that too, just from the practitioners that I speak to. Again, you never know, certainly when it comes to M&A, given especially the regulatory environment. We're going to get a lot more on that when we speak to FTC Chair Lina Khan shortly. But yeah, Sarah, I think there's hope at least right now. And by the way, that's helped by the stock market.
100%.
You got an S&P up almost 20%. You know, we've said it for many. Number one on the list of things that gets people to do stuff, gets CEOs to think about doing things, is confidence. And your confidence goes up when the market goes up.
Speaking of confidence, it's so true. And the retail investor is really piling in here. We got the latest results from the AAII, American Investor Survey, which basically gives a snapshot weekly of how retail traders are feeling. I made a chart of the bull-bear spread, right? The difference between those that are expecting the market to go up and those that are expecting a rout. And it's been up for the last 6 weeks, and that's the longest winning streak since 2021, I would say. So that's also a cautionary sign, right? As soon as retail begins to pile up and people get more enthusiastic and bullish on the markets, you know, that tends to be when there's a pullback. But you can see the participation is there. And we talked to Walt Bettinger, the CEO of Schwab, about this yesterday when he joined off earnings. Here's how he described sentiment.
What's interesting about June is that even as this cash realigning fell to the lowest level it's been in many, many months, part of that was because clients are now moving back into the equity markets. So that's a good thing. It's not simply clients moving money into something in cash that pays higher yields.
Again, you have the euro dollar coming back to retest yesterday's low. Come back to test that kind of twice already today. Again, all before US stock market open. Both times we got the bounce, so we'll see if this third time will also do the same, or if we're going to get kind of that breakthrough now. So again, watching that. That's the chart bottom foreign. And also AT&T looks like it's about to break the daily or intraday high. Again, Cvna starting to pull back, Tesla pulling back, BBIO pushing up. So it's good that we cut some size out. Those options will be losing money. Again, if they come back to the 34.50, looking to re-jump into that. And again, the SPYs near the highs, kind of currently faded on the candle, but we still have 2 minutes to the close of the 5-minute candle.
Thanks. Offering some reassurance across the board is certainly helpful because, you know, there's always that question mark about the shape that the regional banks are in, the deposit outflows, the fact that the Fed's still raising rates. We're going to talk to Citizens Bank and later in the hour, the CEO, but also just a quote on the economy from here's Synchrony Financial, and you can take your pick here. But overall, it's been okay. Here's one I picked out. I think, look, the consumer is still strong. I think they're obviously still spending. Excess savings are coming down a bit, but they're still trending above 2020 levels. That's good. So everything we're seeing on the consumer is still pretty positive. With that said, we're still operating cautiously.
At the same time, you do have some.
Also, just to note, VIX is spiking really out of nowhere. Again, bottom right chart that is.
8.7. That's a dramatic improvement, although Jim made the point earlier, nowhere near what the U.S. and Canada have been putting together on some of our CPI prints.
But a huge sigh of relief. You see that across, even our treasuries got bid on that number. The expectation was more like 8.2, David. So there's some celebration of lower inflation there. But clearly, Bank of England still got work to do.
I want to get to some news we've been following closely this morning, and that involves the Federal Trade Commission and the Department of Justice's Antitrust Division. They released long-awaited draft guidelines, essentially, on how they view enforcing merger law. And joining us from the White House is FTC Chair Lina Khan. Chair Khan, good to have you this morning. We were joined on CNBC earlier by Jonathan Cantor at the DOJ. But let's just start off with what are essentially 13 guidelines Your agencies have been delivering these so-called guidelines, I believe, since 1968. What distinguishes this latest version from the others that we've seen?
Well, first of all, it's so great to be here with you. So as you noted, the agencies have issued guidelines since...
There we go. Big moves on the bonds and the currencies. You can see obviously the euro ended up breaking those lows, and also the the ZT, so the 2-year bonds kind of just smashed down in that one candle. Not seeing much movement on the S&P so again, everything's moving. The bonds, the VIX, and the currencies. The indices seem to be a bit slower. Again, so euro's getting weak, dollar's getting strength. Can't see any news for why that's happening, but I'm not too sure. And again, in 20 minutes, we have the crude oil inventories being released.
Case the FTC is correct, or perhaps when they say, as was recently the case, for example, in Microsoft, when they say, no, we don't believe you.
So these guidelines reflect the law. If you look through the document, you'll see a lot of footnotes to appellate court decisions, to Supreme Court decisions. We read through every litigated merger decision that resulted in a decision from the Federal Court of Appeals or the Supreme Court. And so this document is designed to make sure that everybody is on notice about what the state of the law is. And we'll be right now, we put out this draft guidelines. We'll be collecting public comment for 60 days. We're very eager for public input. We got 5,000 comments when we initially were setting off on this. And so we look very closely at that input, and we'll be eager for additional public comments as we look to move forward.
How long is that period of public comment? When do we expect these to be put into actual effect?
So the public comment period is 60 days. So at that point, we will take stock of the input that we've...
Also, just seeing Trump leads the Republican presidential nomination contest with 47% support, DeSantis at 19%.
Addressing, the realities of digital markets, the realities of how firms are pursuing M&A in the current environment. And so we'll be keen to get that input.
And also seeing Biden lead the Democratic presidential nomination contest as well, with 63% from that party. In second place is Kennedy at 15%.
You're putting out won't be outdated as a result of changes in the market that seem to occur so quickly.
So I think it's absolutely true that enforcers need to be reviewing the guidelines with an eye to the way in which businesses are.
Also, the German Bund, the 30-year Bund, is up 1.8%, average yield at 2.4%, bid to cover 2.2, sales at 1.2 billion, and 87.23 and above.
Congress asked us to enforce the merger laws, and that is necessarily a predictive exercise. As a result, the inquiry that we undertake is a risk assessment. We're assessing the risk that a merger may substantially lessen competition.
Also, the Eurozone CPI did come out year-on-year final. It came in at 5.5, in line with forecast of 5.5%, and also previous was 5.5%.
That it seemed to him that vertical mergers, for example, under this administration or under these guidelines are something that is verboten, so to speak. How do you respond to that? What is the view overall of vertical mergers, which typically have not received the same level of scrutiny as have horizontal deals?
So look, we will look at every case on a fact-by-fact basis and look at the specific circumstances and make judgments based on the specific facts and law at hand.
Morgan Stanley also coming in to a level 93.92 is our first deviation on the 1 year, so we'll see what's happening. Again, Cvna pulling back quite heavy now. $45 will be a lovely bounce or potential bounce. You've got 45 third deviation and also the anchored VWAP. Let me just make sure the Cvna levels are up to date, but they shouldn't have moved too much, even if they're not.
That its rivals depend upon, but that's just one way. There are a whole set of other ways that these types of mergers can risk lessening competition, and the 13 guidelines are intended to really lay all that out very clearly.
Yeah, in the EU, for example, there's a willingness to accept behavioral remedies for a vertical deal. There's a sense here that the FTC will not accept that. Is that the case, or are there situations where you would accept a behavioral remedy, and if not, why not?
Look, we consider every matter on a case-by-case basis. Our obligation is to preserve competition and make sure that mergers are not unlawfully lessening competition. If parties are putting before us remedies or potential packages,
never mind, the levels did update slightly, so it looks like they're kind of now sitting in the range, so not as clean as I once thought. Again, 46 is now the third deviation. You then got 45 for the anchored VWAP, and then 43.68 for the third deviation on the 6 month. So I'll see about trading this. Not as clean as I thought it was, but I'm still happy to potentially play that bounce at $45. But again, we'll see how it plays out. Just won't do as much size now.
recently proposed would update the information that merging parties have to provide us when they're proposing a merger. And the goal there is to make sure that our agency is able to conduct these investigations much more efficiently and much more effectively, so we don't have to waste time kind of going back and forth, getting information that the parties already have on day one and that we need in order to be able to make our assessment about whether a deal does or does not raise those concerns. So I'm hopeful that that proposed change, if finalized.
Also, the bonds and the currencies are continuing to move. Again, you can see the bonds are hit the yesterday's low, starting to bounce a bit off there. The euro dollar is continuing down, small bounce like the bonds is, but probably going to continue lower. And then you can see also on the VIX, we went from 13.30 now at 13.50 in about a 10-minute span. Again, still not seeing too much movement on the SPY and the ES, so a bit weird that we're seeing this strong of movement on everything else.
Including with deterrence, which we hear a lot from market participants about the deterrent effect. And as a law enforcer, you always want to be making sure that firms are on clear notice about what could constitute a law violation and are staying far away from that line. We were very grateful to receive a budgetary increase last year that has enabled us to be growing our ranks. We're still hiring, and we're grateful for those additional resources and the additional work we'll be able to do with them.
You know, deterrence is obviously very important, but when you do lose, there's questions here specific to Microsoft. You lost in the U.S. court. Why not drop the action from there? Why seeking appeal? Why are you continuing to follow, for example, along with the ALJ proceeding, Chair Khan? You know, earlier, Mr. Cantor sort of said he believes in our judicial system and will abide by judicial decisions. So why would you continue, given the court has already been heard from, with this action?
We fully believe in our robust system of judicial review. I won't be able to comment on any specific matters, but generally, if we get an adverse decision from a district court, we look very closely at it to determine whether we think there were any errors of law or misapplication of law that we think warrant appeal. And so those are the types of assessments that we undertake as we make these decisions. There are a whole set of instances in which the FTC has not moved forward with an appeal, but in instances where it has, sometimes quite successfully, it's always because we believe that there was a misapplication of the law or further clarification of the law that needs to be done. And that's usually what drives those decisions.
Yeah. You know, how much is any of your decision-making driven, or at least in part figures into your decision-making, what goes on at the EU, for example, or even the CMA? And I ask that question in part because there was a lot of back and forth, that would appear, based on a Freedom of Information request, between the FTC and the CMA involving Microsoft and Activision. Seems somewhat unusual. How much does what they do figure into how you think about what you do?
Look, I was very fortunate to inherit an agency that is seen as a leader globally. During the Bush administration, the FTC launched an Office of International Affairs. And so for over a decade now, the FTC has been entering into cooperation agreements with enforcers around the world. There's been strong support historically from the business community and encouragement for the FTC to be working closely with other enforcers to ensure what some folks call harmonization. So that's the state of affairs. The FTC works closely with other enforcers, but at the end of the day, we make all of our determinations based on the facts and based on U.S. law. We always use our independent judgment when we're making these enforcement decisions.
Why was there a need at all to talk to the CMA about Activision and Microsoft?
So there are various cooperation agreements in place. Again, some of them going back to the Bush administration that lay out appropriate processes. Sometimes it's businesses that want to encourage the FTC to be talking to other enforcers to ensure more streamlined review and more efficient information sharing. So this has been a long-standing practice. I'm grateful that the FTC is viewed as a leader internationally, and all credit goes to our terrific staff of the Office of International Affairs that for many years now has been ensuring that we are sharing our experience and expertise around the world.
You mentioned your staff, and Sarah asked about it as well. I want to reference a letter from what was then the outgoing Commissioner Christine Wilson. She was very critical of you and of what she said was the dissatisfaction amongst the staff. How do you respond to when she says your leadership has led to the departures of many experienced personnel, causing a notable brain drain, and goes on to say, pains her to observe the tarnishing of the FTC's reputation and the diminution of its efficacy?
So look, we are fortunate to have consummate professionals, extremely talented staff at the FTC who day after day are fighting to protect Americans from unfair methods of competition or unfair or deceptive practices. Of course, we work hard to make sure that the FTC remains a great place to work. I've been really thrilled that we've been able to recruit a whole set of new folks. We just launched a new Office of Technology. Within a matter of days, we got 600 applications from cutting-edge technologists, data scientists, data engineers who are eager to bring their skills and talents to the FTC. And so we'll look forward to continuing to do that type of
Goldman Sachs also up about 2 and a bit% off earnings.
talents that we need.
All right, back to the principles that were announced today. One is mergers should not entrench or extend a dominant position. Wondering if you can expand a bit on what exactly that means. There's some people that want to take me back, apparently, to a decision in 1967 at the Supreme Court involving Procter & Gamble, where this theory was outlined. Give us some more sense here as to what that means when you say should not entrench or extend a dominant position.
So there's long-standing case law that seeks to ensure that mergers are not being used to entrench dominance in ways that are basically maintaining a monopoly or creating a market where other firms also have to significantly grow in order to be able to compete. You'll see in the document there is significant citations to case law that really lay out what some of those legal tests and that legal analysis looks like. And so we're going to be faithful to the case law in the books.
Another one that I noted here, a merger is when it's a part of a series of multiple acquisitions, the agencies may examine the whole series. That seems to apply to private equity, for example, which can roll up companies and then combine them. What is your view on that, and how aggressive will you be perhaps in reviewing transactions that in the past did not get perhaps a second request, let alone an objection from the FTC?
So these guidelines are agnostic as to particular business model, but we wanted to make sure we're being clear-eyed about business trends and trends that we've seen in the markets. One trend that we have seen is roll-up strategies, so instances in which a firm will undertake a series of acquisitions, no single one of which may raise legal concerns, but in the aggregate, there can be significant consolidation of a market. And so we wanted to make sure that we were putting folks on notice that those types of instances can warrant legal scrutiny and legal concern. And again, there's precedent, including from the FTC recently, where we have applied scrutiny to those types of roll-up strategies.
You mentioned a few minutes ago that the new guidelines require deals to provide more background information and may lengthen the times. And so I'm wondering how you factor in consumer benefit in that scenario, because any delay or cost could influence the consumer, could harm the consumer, could hurt the economy. Do you think about that?
So absolutely. Congress passed the antitrust laws to promote fair competition and protect the public, including consumers, from unlawful mergers. And so that is a North Star that we follow when undertaking this work. As I noted, the goal of the additional information that we'd be seeking is to make sure that we can pursue our investigations more efficiently and more effectively, and on the back end, that can lead to a more streamlined process.
You've talked in the past about the new way that you're approaching antitrust is designed to perhaps enhance innovation, which you believe may be stifled as a result of the presence of these what we'll call large platforms. How, where are we in that effort? And how are we going to see it show itself through some of the actions that you've already taken and that you might take in the future?
So a core pillar of America's economic success and the reason that we've been able to be the home of so many breakthrough innovations is the fact that we have promoted free and fair competition and ensured the markets are open, and that if somebody has a good idea and it's popular, that they're able to compete on the merits. And so we're fully confident that if we vigorously and faithfully enforce the antitrust laws, that's going to be best ensuring that we remain a great home for innovation.
Yeah, there are a lot of people who obviously take issue with the positions you've taken, Chair Khan. And there is some question about morale at the agency you run. How do you deal with that? You're attacked regularly. I mean, most people didn't know the name of the FTC chair until you came along. You've taken a fairly high profile, given how high profile you've been. How are you dealing with that? And how would you characterize morale at an agency people I speak to say is not good?
So, look, we are fortunate to have dedicated, committed, talented public servants at the FTC that for years now have been totally out-resourced, especially when they're required to bring lawsuits against some of the most well-resourced companies in our economy. Core to the DNA of the FTC, because we're charged with enforcing the antitrust and the anti-monopoly laws, is sometimes we will be going up against entrenched, very well-resourced interests. And of course, that can provoke certain types of ire. But our North Star is protecting the public, protecting consumers, protecting entrepreneurs, protecting startups. As part of this job, I hear regularly from the business community, including from independent businesses and entrepreneurs and startups. And what they share with me is that one challenge they face is that all too often markets are locked up by incumbents. Incumbents are engaging sometimes in monopolistic or anti-competitive practices in ways that are not enabling them to compete on the merits. And so we want to make sure we're taking that input very seriously, and that informs our work as well.
And finally, what if you keep losing? You lost in Microsoft Activision. You may lose in Amgen Horizon. I know you won't comment specifically on it, but what if the FTC keeps losing in court? What is that going to do in terms of your approach?
So look, again, I've been grateful that we've been able to achieve a whole set of successes, including in the courts. Shortly after I joined, we refiled a lawsuit against Facebook, and last year we survived a motion to dismiss on that, including a whole set of holdings as part of that opinion that really mark a programmatic step forward. At the end of the day, we bring lawsuits when we determine that there is a law violation. Of course, we're going to fight hard and put together the best cases that we can to explain to the courts why there is a law violation there. But ultimately, we follow the mandate that Congress has given us and seek to faithfully discharge our statutory obligations.
Chair Khan, certainly appreciate your taking time with us, and we'll be following the progress of these guidelines closely. Thank you.
Thanks so much for having me.
Thoughts?
What do you think?
Questions?
Your thoughts. You cover this stuff pretty in depth. I mean, I know that this is a regular occurrence, but it does appear, and she's going to get a lot of pushback from Republicans, critics, right, from business community, that you lose some big ones in court, and then you try to change the rules.
Yeah. I mean, I think the last question is one of the key ones. If they continue to lose, do they change their approach in some way? I asked, obviously, about Microsoft Activision, for example, where they continue, at least at this point, to be persisting in what we're calling this administrative law judge proceeding. Now, it's not going to stop the deal from...
Okay, we have the thing coming out in... the crude oil coming out in about 50 seconds. Again, the number doesn't tend to really matter all that much. Again, the crude oil chart's here. We'll change that to a 1-minute chart, because, again, the main thing we're watching for is a fade. The number, though, shouldn't matter too much. It's normally just a fade in general. If we don't see it fade quite quickly, then we can pay attention to the number. We'll have it up ready anyway. But yeah, it shouldn't be as key or shouldn't be as important. So let me just make sure I've got the level ready. Okay, we've got about 10 seconds. Okay, coming out now. Okay, so there's a bit more of a bigger move. I'm not touching it yet. It seems too small of a move to even justify. Haven't seen the number come out yet either. So I don't know if it's delayed or something. Yeah, because we're not getting a move and the number's not coming out anywhere. Oh, there we go. Getting a bit more of a move now. Okay, there we go. EI crude comes in at actual is minus 2.8 million compared to the forecast, which isn't actually showing me there. The forecast was minus 2 million. So again, looking to play this long and trade it basically back to its 76.60 basically. In with one contract now. We'll probably get another one in at the 37 if we can hit that. And then can target 76.60. Okay, actually, the numbers are messing up everywhere I'm seeing them now, so I'm not sure what the actual official number is. Oh yeah, there we go. We had, oh yeah, crushing inventories. Yeah, so the real numbers then is minus 0.7 million, and again the forecast was minus 2 million. Depending when you see it, some places are showing me minus 2 million, and some are showing me 2.5 million. But again, it's pretty much in line. You tend to see bigger misses normally, which would create a bigger reaction. But it seems like the fade's working decent. And again, we'll probably have this exact same trading opportunity tomorrow on that gas. Okay, wouldn't mind if it can hit the 37. There we go. Okay, we're in with a new contract now. We can let this one even run a bit more because we made money on that first contract. Again, that level that's dotted there as well, that is the first deviation from the 1 year. Normally we only take trade the first hit, but in a case like this, it can just be used alongside as a resistance to pay attention to, or support. Again, we got BBIO coming back to its anchored VWAP, which will be nice because then we can re-get into those short puts or long puts. We also have Tesla at the highs. Again, I don't think this earnings is going to be a strong move to the upside just because we are still sitting at those higher day. Sorry, we have just been kind of, I think they're priced in by how we've been moving. Cvna basically still sitting at that deviation at 51.45, not much move on there. Again, the Euros pretty weak on the day, continuing to push lower. The VIX is now staying a bit more flat at about 13.50. And the bonds are holding up at yesterday's low. So dollar still seems to be weak. Getting a bit more of a bounce now on the crude. Again, coming into VWAP, that's normally an alright play as well. Coming into the release, tends to bounce off its VWAP quite often. Also coming in later into the day, you can see at 75.40 if we could push down lower, which a lot of times this will turn into a trending move, so should be alright. Coming down to 75.40 will probably be a good long bias level because not only do you have that 6-month deviation, you've also got the anchored VWAP, so they should be quite nice levels.
Of course, is due to the higher mortgage rates hitting affordability. Higher rates, though, are still keeping current homeowners who are paying much lower rates in place. That should continue to benefit the builders, but only if they can keep their homes affordable. Fewer builders now saying they're lowering prices, but more are trying to add supply on the lower end of the market. So we'll see if that helps. Sarah?
Yeah, see how that impacts the overall inflation. Thank you, Diana. Diana Olek. After the break, Activision Blizzard CEO Bobby Kotick here at the New York Stock Exchange. Don't go anywhere.
Okay, there we go anyway. That's on ad break now. Again, the crude oil is holding that VWAP quite nice. We'll see what it can really do from here. And yeah, again, the crazy thing as well, especially when you see SPY zoomed out like this. So again, this is a 90-day 1-hour chart. Look how like that is just such a strong upside move. It's actually quite unbelievable. Considering we're in such high inflation and all that, quite crazy to see. Again, the crude oil seems like we could be now pushing high. If we can break kind of 76.30, we should just see that push back up. But again, these are normally trending moves, so I don't want to ever be in them too long. Because if we break that VWAP, then really there's no key levels. Should just be in a pretty much free fall until 75.40, which would be the nice opportunity anyway. Getting the bonds are getting a bit more strength now, starting to bounce. The euro is still at the lows, but a small bounce will probably continue down. The S&P and the ES futures both pulling back. Well, actually, you got the SPY, which is broken its VWAP already. You got the futures coming back to test their VWAP, so we'll see what that is. While the ES futures hit their VWAP, we should be seeing most likely SPY come into its yesterday's high. So it could be two reasons for a bounce if we can see that. Again, BBIO still slow trend up, but we could be seeing a move up to the anchored VWAP, which could be nice. And again, Tesla still at the highs and Cvna still chilling at that 51.50, which is the fourth deviation from the 6 month.
And Activision extending their merger deadline, or the termination of their agreement, to October 18th. Activision also, by the way, out with its earnings this morning. They were ahead of estimates, although the company did warn about growing concerns surrounding the economy and the gaming industry. Joining me now, first on CNBC, Activision Blizzard CEO Bobby Kotick. It's not Sun Valley, sorry. Just
Thanks for having me. I'm happy to be here.
At the NYSE. I'm happy to have you, Bobby. It's been a while since you and I have spoken. First, let's just get to the deal itself. Some shareholders, unhappy with accepting 99 cents and an additional dividend and a potentially higher termination fee should this deal fall apart after August 29th. What do you tell them as to why these are acceptable terms?
98% of our shareholders approved this transaction. So our shareholders are overwhelmingly positive about the details of the terms. I think the short extension, we got significant consideration. I think the termination fee may be one of the largest in history. We've got an improvement in commercial terms. We're paying a 99-cent dividend. So I think the shareholders, my view is that this is a great deal for
You didn't think you were in a position to potentially extract a little bit more compensation from Microsoft? You've already waited, this was announced in January of 22.
Well, we extracted a significant amount of additional value. If this deal isn't going to close, we're going to pay a dividend. So, from my perspective, I think shareholders, what I've heard is shareholders are overwhelmingly enthusiastic about this transaction.
Are you overwhelmingly enthusiastic about it?
I think given how competitive the landscape has become, how difficult it is to attract the kind of talent in AI and machine learning that we see is necessary, and especially now as you're starting to see the pace of the use of AI and machine learning change, that this is a great transaction for our shareholders, for our company, and so I'm very excited about it.
We're waiting for the UK, as we have been for some time. The dynamics seem to shift markedly, really, over just the last few weeks. What are your expectations when it comes to what is left to do there to get the approval of the CMA?
So if you think about the history of the video game business, the UK really factored significantly in the evolution of the industry. The BBC had a computer in the early 80s. Sinclair was one of the first people to introduce a consumer computer. There's a really exceptional amount of talent in animation, in art, in game design. And so I think the UK recognizes that they have an opportunity to continue to be a leader in the video game industry. And I think we're going to end up seeing a reasonable resolution, and hopefully it'll be quickly.
Well, what's quickly? Next 45 days?
I don't see any reason why it shouldn't be able to happen that quickly, but it's hard to know. It's government, it's the summer, but I think that there's a good faith effort to work through all the issues and the opportunities, and I think that we'll come to a quick resolution.
Was there a point at which, as much of the market was at least, that you were particularly negative given the initial opposition, strong opposition of the CMA when they came out with their interim decision, that you thought this was just not going to happen?
Look, I think if you listen to Jonathan Cantor on the show this morning, he was very thoughtful and recognized that the law matters and that the facts matter. And I think what he said was unequivocal, that when they bring these actions, they abide by the law. And so we've always believed that the law and the facts in our merger were very supportive of a transaction.
Even when it came to the CMA, where it was, seemed to be less transparency, at least for many of us who didn't know the process as well.
Well, I can't speak to the process as much as where we are from an outcome perspective. Microsoft entered into a long-term agreement with Nintendo, with Sony. So I think most of the concerns that were expressed are concerns that are, they've all been addressed.
Yeah. So I'm just curious as to what your expectations are. Microsoft is pursuing what, has basically been sort of telegraphed as a small and discreet divestiture to meet their objections in the UK. Is that something that has to take place prior to the approval from the CMA, or are we going to get this thing called a derogation, which allows for the closure of the deal before that divestiture has taken place?
So I can't comment on the specifics of what the resolution will be. I think the EU was incredibly thoughtful in the way that they approached the process. I think they were extremely well informed. I think one of the reasons is that the video game industry is growing dramatically in Europe. I know from our own operations, we have studios in Poland, in Berlin, in Barcelona, in Stockholm. There's an enormous amount of talent and opportunity, and I think video games are seen as an opportunity for growth in a market where there has been not a lot of growth.
Yeah.
And so I think in the case of the UK, I can't tell you what the specifics will be, but I think they've come to realize that, the remedies that we've proposed are reasonable, and I think we'll be able to get the deal done quickly.
You seem to think perhaps before the reverse break termination fee would even go up, so before the end of August.
I don't want to make a prediction, but
come on, make a prediction.
I don't have enough facts to make the prediction, but what I would tell you is I think that there's a good faith effort to actually move quickly.
Yeah. What about your future? I mean, you're under contract, I believe, until April of next year. And so you will stay during what will be the integration, I guess, assuming this deal does.
Cvna popping out of nowhere up to $55. Could be potentially retesting those highs. If so, again, potentially looking to short buys from kind of $58 or so.
Company and, our company. And so whatever I can do to ensure the integration goes smoothly, I'm going to do.
What are you going to do after that? I mean, Bobby, there were a lot of people who thought you might take the opportunity of the expiration of this agreement to say, I'm back. That's not the case, clearly. You believe in this deal, as you've made clear. So, the company you built, at some point, you're going to have to say goodbye to. Why are you willing to do that?
Look, I work for our shareholders and our stakeholders, and our shareholders, when they voted 98% for this transaction, my responsibility is to, ensure that the shareholders get the best return for their capital that they can, and that's what I've done for 32 years.
Well, it doesn't appear that you've been, hurt at all by this very long wait period. The quarter was a very strong one.
Quarter was a great quarter. In these merger circumstances, you could see people distracted.
Yes, that happens a lot.
Our teams are focused, they are motivated, they're enthusiastic, they are continuing to make great games, and that was reflected in the success of the quarter.
They're going to be okay with working for Phil Spencer and Microsoft?
Phil is a fantastic guy. It's actually a big part of why we're so enthusiastic about the transaction. We have tremendous respect for the leadership. I think if you look at Satya as the CEO of a company, I think he's generally regarded as one of the best CEOs in the world. He focuses on the things that matter, like culture and values, and he is just, I think, transformed Microsoft in a terrific way. So our employees are very excited about the transaction.
All right, I mentioned you've had a strong quarter. You didn't increase your guidance, though. Any reason why not?
Well, we think there's a lot of economic uncertainty, and I think you've heard the Fed say that they are focused on a 2% inflation rate next year. I think that we haven't seen the last of interest rate increases. And, I think we have a lot of concern about the economy, whether or not people have the ability to pay for software and other.
Are you seeing signs of it, though, in your business?
We haven't seen it yet, and people say our business is recession-proof. I think that it isn't. I don't think there's any such thing as a recession-proof business. And I think that, over the next few years, we have concerns about the economy, increased competition. The best video game companies in the world today are companies in China like Tencent and ByteDance and Alibaba. And then you've got Nintendo and Sony with incredible intellectual property. There is a lot. Netflix has now entered the business. There is a lot of competition.
Yeah, that said, Diablo 4 seems to be going quite well, doesn't it?
Diablo 4 is going great, and we delivered an exceptional
Has it continued to perform well since what was a strong launch?
It's doing well, and people are excited about that game, but it's taken a long time to deliver it. And I think one of the benefits of the Microsoft transaction is access to more talent. And that's been one of our real challenges, is making sure that we have access to the type of talent that can be competitive with companies like Tencent, who have some of the best talent in the world.
Yeah. I know you were here listening to our interview with Lina Khan. And obviously, you beat her in court not that long ago, or Microsoft did. What were your thoughts when you were listening to her answer some of our questions about these new merger guidelines, particularly given you've been a subject of them recently?
Just the little that I heard, I don't think going back to the 1960s as a way to think about the 21st century is, that.
Well, they've been updating these guidelines since '68.
Right.
That's when they first appeared.
What I heard is she specifically referred to decisions that were made in the 1960s. My view is, you have to recognize your responsibility. And one of those responsibilities is focused on protecting American workers, American consumers, and not unduly burdening businesses that have legitimate opportunities for transactions. And I think that that is their mission statement. And so hopefully they'll adhere to that mission and not unduly burden companies that have legitimate opportunities for consolidation and mergers.
You don't seem to think they're doing that, though, do you?
Well, I think in our case, we've, as Jonathan Cantor said, we won in the district court, we won again in the district court, we won in the appellate court, and we now had a win in the Supreme Court. At this point, I think the law is clear. The decisions have been rendered. There doesn't seem like it's a...
Well, I asked that question. She doesn't seem to be backing off in terms of wanting that administrative law judge proceeding. Does that surprise you?
It does surprise me. I think at this point, they've seen what the courts have said. They know the facts. They know the law. It seems like probably prioritizing other things is the best opportunity for the FTC.
Finally, you mentioned China, of course, which doesn't really figure that much into the thinking, it would seem, of the FTC to a certain extent in terms of the global marketplace. But what about Activision, or what could be Microsoft Activision in the not-too-distant future in terms of China? I think you had a JV in the country once. Is there a chance that could be reestablished, or given where things are right now, no way?
Well, we have an operating JV with Tencent. It has been an incredibly productive relationship. They are an exceptional company. They're the world's largest video game company now, and great management, great talent, ability to build franchises. They've been a great partner. It is the largest market in mobile in the world. It has an enormous amount of growth. I think that there is no good reason why we shouldn't be continuing to operate in China, where there's nothing but opportunity and talent.
All right. What do you think, percentage-wise? 99% chance you get this deal done?
If I could predict, I probably wouldn't be making video games.
Really? You're one of the financially the most sophisticated CEOs that I've ever dealt with, so I don't know about that.
I appreciate that.
And I take those comments on the economy seriously as well. Sort of somewhat surprising. You're not seeing any green shoots at all?
I'm a worrier by nature, but I see a lot of indications of things that we've never experienced before. You look at interest rate increases, you look at the deficit. I don't know how many times in our history the deficit has been substantially greater than GDP, and this, we're looking at 50% greater than GDP. These are personal concerns, but I worry about the economy.
All right. Bobby, appreciate your time, and so much thanks for coming down here to the NYSE.
Thanks for having me, David.
See you soon. Bobby Kotick, over to you, Sarah.
All right, David, we're going to turn back now to the banks. And Goldman Sachs in particular, that's the mover of the day. Leslie Picker has been tracking the action, listening to the conference call, and joins us with more. Leslie, what can you tell us?
Hey, Sarah, that conference call just ended about 20 minutes ago or so. The executives sharing some color about where they think we're at in the deal-making cycle, and that's helping actually propel the stock in the green today. Goldman said its investment banking fees backlog increased quarter over quarter. CEO David Solomon saying on the call that there are, quote, a number of structural catalysts that should lead to increased levels of activity. He said they're seeing it begin to pick up in a few spots already, particularly in capital markets. He also said there's more M&A dialogue.
I can't tell you exactly what the journey is, but when I go back and I look historically at other periods where the macro environment has created sharp drops in investment banking activity, they tend to last for a year or so, and then they start to improve. And so I think we're starting to see that here.
Solomon's more optimistic comments about the deal pipeline mirror those we heard in prior reports from Morgan Stanley's James Gorman to Citi's Jane Fraser. Overall, Goldman, though, had a noisy quarter, although much of it was telegraphed previously. A number of dynamics weighing on return on equity, which came in at about 4% in Q2.
I do actually need to head down to the shop real quick, though, so I'm going to leave the stream on so we can come back and see if anything's moving, but I'll just leave the
online lender.
I just realised that's been playing the whole time. I said I do have to actually leave for a bit, so I'm going to leave the stream on because I do want to, even when I'm out, then I can check what's happening in Cvna, Tesla, BBIO, and we'll actually change that back to Netflix. So I wanted to keep an eye on those, and again, we'll be back probably in about 45 minutes, an hour. But again, we will be having the news just play in the background anyway, so I'll see you then.
On that outlook and those sort of green shoots in investment banking. Leslie, thank you. Leslie Picker. Regional banks are also reporting results today. Critical season for the smaller banks as investors and regulators alike focus on their health after several failures earlier this year. Citizens Financial, the latest to do so, a super regional. Bruce Van Saun joins us to break down those numbers and what he's seeing. Bruce, your stock is up sharply as well. What was your message to investors? Overall, the quarter looked okay.
Yeah, I think the message was that we're playing really strong defense. And so we grew our deposits 3%. We paid down wholesale funding. We set up a non-core division to run off some less attractive loans to make room for more attractive loan growth. And then we also then said we're playing some really interesting prudent offense. So one of the things we did in the quarter was we attracted about 150 people, formerly with First Republic, onto our platform. And we fleshed out how that business is going to build and be very attractive for us over the medium term. We gave a progress report on how we're doing in New York Metro following our 2 recent bank acquisitions. So I think we had a good mix of strength on defense and then also some really exciting initiatives on offense.
Obviously the deposit growth was key, and you guys needed that, but at what cost? How much more is it costing to get those deposits, and what's the outlook there?
Yeah, so we did pay up a bit to get that, but there's a little trade-off in that. So if you pay for deposits better quality long-term funding, and then we ran off some wholesale funding, which is also high cost. So I think we took it in stride. We said the number one objective is to grow the deposits, even if we have to pay up for them. I think looking forward, assuming that the Fed it does one more hike and pauses, then we should start to see those deposit migrations from non-interest bearing into interest bearing accounts, and also the kind of fraught competition for deposits and pricing that should start to abate over the second half of the year.
Are you already starting to see that? Because there was just such a rush to money markets on the back of these rate hikes.
Yeah, I think it's starting to slow. Certainly the migration out of non-interest bearing, we're back to about 23% of our total deposit base being in non-interest bearing. That's where we were fourth quarter of 2019 before we hit the pandemic. So that number ran up to around 30, and it's kind of run back down. There's no real reason if the Fed stops here from that going down further. And that's pretty key in terms of your overall cost of funds.
So what does the credit picture look like for the consumer, Bruce, right now?
Credit is in really good position for the consumer. So I think folks have certainly have plentiful employment opportunities. And so the job market underpins the consumer, and they still held on to a fair amount of liquidity that they built up during the pandemic. So we don't really see any concerning trends at all in consumer credit. On the corporate side, generally, also, most companies are in reasonably good shape. They've navigated this environment okay. They took steps in the pandemic to lock in lower cost financing, so don't see a lot of trouble spots there. The one that we keep coming back to is in commercial real estate and the general office sector. We did give some details about our exposures there, which I think generally are diverse and pretty good quality, and we now have a reserve of 8% for loan losses against the general office exposure that we do have, which is pretty high by historical standards. So we're starting to work the pig through the python, so to speak. We worked through about 26 loans that had maturity in the second quarter, or in the first half, and so that's about the number we have in the second half. So we're on it. We have good people working on that, and we're working with borrowers to try to make sure we get through in reasonable condition.
I mean, the specificity is helpful there. So, Bruce, just even though you say credit is good and the consumer is in decent shape, all banks like yours are being so conservative, and we've seen lending standards tightening, and we're wondering how much worse that's going to get as we've seen such extreme tightening from the Federal Reserve, and as you anticipate new capital rules and new regulations coming through. What does that look like?
Yeah, I think most banks are pulling in a bit and being cautious, and part of that is just the economic outlook of, are we going to hit a recession? I think that picture is improving. So there's, I think, a higher percentage of the soft landing, the so-called Goldilocks scenario, is coming back to fore. And so we'll see. I think we're certainly have the capital strength to lend. The deposits have started to stabilize, so you could see banks start to lean forward again as we enter 24. But I think through the second half of the year, most banks will continue to be cautious, and that'll also serve the Fed's purposes of slowing the economy and bringing down inflation. So I think we're going to be in that mode at least through the end of the year, but things could start to turn in 24.
It's really interesting to hear that kind of optimism across the board from the banks about the turn in 24. Bruce, thank you very much. Appreciate the color.
My pleasure, Sarah.
Bruce Fenson of Citizens. David, the stock is up now more than 5%, and it kind of makes you feel better hearing him talk about the consumer.
Well, those comments also
lending.
about lending, I thought were very interesting that he just made.
So we're going to start doing it more in 2024. Banks are being cautious now. This is what the Fed wants to see, but it's not the kind of credit crunch that a lot of us feared after the failure of a few banks this year.
Yeah. All right. Well, with the broad S&P, or at least the S&P, it's not that broad, is it? You should know better, of course. It's really 7 stocks and a few others. It's up, though. You can see that right there, along with the Dow and the NASDAQ. We got a lot more Squawk on the Street for you straight ahead.
Good Wednesday morning. I'm Carl Quintanilla with Sarah Eisen live at Post 9 of the New York Stock Exchange. Ahead, he was one of the few strategists calling for a big market rally back at the beginning of the year. Now he's saying we may have hit a bit of a peak. How is he preparing? Stifel's chief equity strategist, Barry Bannister, is with us.
A recovery in mortgage refinance demand this morning as homebuilder sentiment rises again in July. Redfin CEO Glenn Kelman with us this hour with a reality check on the real estate market.
Later, is the EV revolution just an international phenomenon? Are Americans just not into electric? Former Ford CEO Mark Fields coming up.
Topping the tape for us, though, this morning, an upbeat surprise. Citigroup's Economic Surprise Index hitting its highest level in 2 years, indicating just how good the economic data has been relative to consensus expectations. It's one thing that's fueling this rally, which continues to go on now. Week to date, up almost 1.5% on the S&P. We're up another 1/3%. Senior markets commentator Mike Santoli joins us. Mike, I would just throw in the retail sentiment continues to show that investors are getting more enthusiastic on the retail side. The put-call ratio people are looking at.
Yes.
What does all this tell us?
Well, it tells you that there's been a relatively, I would say, stubborn and persistent sense of caution for most of this year that has completely given way, and people have embraced the upbeat case. That includes people believing that, a softer landing is basically the central premise of where we go from here, at least for the rest of the year for the economy. And then the idea that earnings growth is troughing, or rather year-over-year earnings declines are hitting their worst levels right now, and they're going to increase. I'm not that caught up, as you know, in the labeling of a bull market based on very rigid standards. But is the market acting like a bull market? I would say yes. Multiples are expanding. That's what happens early in a bull market as you handicap earnings growth resuming. You're seeing the market rotate as opposed to pull back broadly. It's got overbought and stayed overbought. You have retail participation coming in, as you mentioned. And then you also basically have this short and shallow pullbacks as opposed to deep and scary ones. Now, all that brings us to a point where you say, has there been enough already in the short term? And I think that's now the relevant conversation, because you are seeing a little bit of the frothiness. It looks like a chase, a lot of short squeezes, a lot of running back to the old favorites, a lot of the blasted out stocks of, the meme stocks, and also just the recent IPOs of 2020 and 2021 are going vertical. So now it's a matter of, do we get a breather, and is it anything worse than a breather if we do get that pullback?
Mike, bit of a discussion this morning for those who do have aggressive year-end targets as to what sector needs to participate more to get them there. And I wonder if you do think it's the banks.
You need banks just kind of not to act as a drag at minimum. I think that is true, that it's one of the kind of the pistons that hasn't been firing, and you would want to see it happen. It doesn't really have a lot of sway over the overall index, but it does usually give a bit of a tailwind to smaller stocks. That's what we've seen, too, in terms of credit-sensitive stuff. So, yep, I think you would look for it in an area like that. I think that the interesting thing about a market that's in one of these positions is it usually finds a way higher without necessarily, knowing in advance exactly what that's going to be. So far, it hasn't been a zero-sum game. The hot glamour stocks of the NASDAQ still working, and some other stuff coming along behind it.
Indeed. We'll continue to get a bunch of bank results throughout the week. Mike, thanks. Talking a bit. Mike Santoli. Our next guest was one of the first strategists to call for a rally back at the beginning of the year. Now it says we may have seen the peak with the S&P flatlining around 4,400, although we're obviously above that now in the second half of the year. Joining us here at Post 9 is Stifel's chief equity strategist, Barry Bannister. Barry, great to have you on set.
Great to be here.
Great to see you. I keep thinking you were zigging when others were zagging. Are you now trying to do the same?
Well, the second quarter really was led by the big tech, but we think the third quarter is going to be led by more what you call cyclical value. And this would be the banks, diversified financials, industrials, basic materials. They should give you a nice outperformance pop in the third quarter as the economy holds on.
So why not more aggressive targets then going into year end?
Well, I think that by the end of the year, our model is showing that unemployment's going to perk up. It's going to go up. And the Fed is going to hold on to a high rate longer than people expect. They have to ensure that inflation is down. They actually have to overshoot to the downside. And so if the Fed holds on, real rates go up, price earnings multiples come down, I think we get back a few percent in the fourth quarter.
Do you have give us a picture of how you see employment printing in the back half?
Well, I think it'll be 4.0% by the end of the year, and that's enough to push you towards a little closer towards a recession fear. And I think it'll be 6% by the November 2024 election. So when we look out into 2024, there are a lot of risks that are not being appreciated. We don't have the kind of earnings growth. We're almost flat year over year next year. The Street sees it up $20 for the S&P 500 earnings. And I think oil is a great big geopolitical risk in 2024. Russia has a lot of incentives to reduce production and drive the price back up.
So then why would you buy cyclical stocks on the back of a spike in the unemployment rate and the Fed remaining restricted for a long time?
That's a great question, Sarah. I mean, the thing about what we're in, and it's a secular bear market since December 30th, 2021, when the S&P 500 peaked, is that in a secular bear market, it's nothing but a series of short-term trades. Buy and hold is dead as a doornail, and it will be for probably 10 years to about 2030. As a consequence, you know, the second quarter dominated by big tech, third quarter in the more industrial, basic materials, fourth quarter could be a different story entirely. So we're going to have to rotate around the board.
So the cyclical trade is a rental, so to speak.
Oh, everything's a rental in this kind of a market. Yeah. If you look out to, or look back to 2022, it was the stagflation trade, right? And that's not working now. But that was a huge trade. You made a lot of money in utilities, and you made money in energy. But they're not working now. So what works is a rental, and nothing lasts for long.
I feel like there's this big debate shaping up over 2024 already. I mean, you're sounding kind of downbeat. 2 minutes ago, we heard from Bruce Van Saun, the CEO of Citizens Financial, saying he thinks that banks are going to step up loans next in 2024, that the conservatism is going to fade. We're hearing all sorts of bullishness and green shoots in the investment banks, that we're going to start to see deals in 2024.
Well, the economic surprise index beating by such a wide margins because we lowered the bar so much. As the economy bumps up against resource constraints, as you get into 2024, inflation becomes a little more entrenched. We actually think the core PCE deflator is going to stay around 3%. And the Fed is saying 2%, which means I've got to get Powell's Fed from 2 to 3 and accept that on a longer-term basis. And that's going to be a heavy lift.
Do you think they changed the target formally, or just sort of?
It's hard to just do that on the sly. I mean, they're going to have to accept that inflation is higher than it used to be. Wages are incredible, and what's called supercore, core PCE services X housing, that's been very sticky. And until labor weakens, it's not coming down.
It has, but the market inflation expectations don't show signs that it's going to stick around for a long time.
No, like the 10-year break-evens, 5-year break-evens, no, they don't. And one of the things that we've been saying, and the characteristic of a secular bear market, is that the price-to-earnings multiple compresses over time, even if the earnings grow. You end up crossing, and it's pretty much flat. And so what we think is that over time, inflation expectations in the longer term are going to have to pick up. We're in a structurally short labor market. We're going to bump up against our resource constraints soon.
So to the degree corporates cut headcount, is it under duress because their margins are pressured? Is it because of productivity and AI?
Well, AI is definitely going to be disruptive before it's additive to the economy. The thing about wages is wages are now exceeding the pricing power of the companies. So when the trade was the other way and your pricing power exceeded your wage costs, obviously there's no need to lay off people. But as soon as the wages remain sticky and the pricing power is diminished, you might see the uptick in layoffs towards year end.
So we're sort of entering the darker picture of a disinflationary world.
Inflation, or excuse me, a recession is largely unexpected, Carl. And last year we knew that we wouldn't have a recession. We'd helicopter dropped $5.2 trillion into the economy. But if I look forward, it's not going to be expected. Good news will become bad news as you approach year end into 24.
We'll be touching base with you over the next 5-6 months, Barry. Good to see you. Thanks for coming in.
Thank you.
Barry Bannister.
After the break, former Ford CEO Mark Fields on the price cuts for the electric F-150 and what to expect from Tesla, which reports after the bell. Some on Wall Street now asking if Americans even want EVs or whether the benefits are worth the price.
We'll get to Netflix as well tonight. Benchmark sticking with its sell call despite this recent rally ahead of earnings after the bell. That analyst will join us in a bit as well. Stay with us. Talking a lot of financials today this morning on the back of results from Goldman Sachs, of course. You can see the shares up better than 1%, grabbing most of the attention on this miss on EPS. It is the second worst quarter since Solomon became CEO, but Solomon on the call says there's definitely been a pickup in equity capital markets and on the M&A dialogue. Stock has turned around, now positive on the session. A lot of phrases like kitchen sink quarters, and as Mike Mayo well said, better late than never on some of these.
Right, because a lot of what dragged them down were issues that we know they've been dealing with. Some of the legacy balance sheet things, the Green Sky deal, the commercial real estate losses. They warned about it. They telegraphed it, which is another reason the stock could be up. And if you strip that out, the overall business is performing. It's a weak environment for investment banking. And now they're given hope that that's coming back.
Yes.
So taking it as a positive. Let's turn now to a big week in the auto space. You've got Tesla at a 10-month high with earnings after the bell. Ford this week cutting prices on its F-150 EV pickup truck, and now new projections from Ally Financial in its Q2 earnings this morning, forecasting a 12% decline in used vehicle values in the second half of the year. Joining us now with his outlook is former Ford CEO Mark Fields. Mark, it's good to have you. Welcome.
Hi, Sarah. Good to have you. Thank you.
So how did you read the price cuts on the F-150 Lightning?
Well, I think, listen, they're taking a page a bit out of the Tesla playbook, which is, they have the best-selling electric pickup truck right now. They have new competition coming, whether it's the Cybertruck for what they call the lifestyle pickup truck buyers. You got the new Chevrolet Silverado electric truck coming a little later this year. So I think they made the calculus. They said, listen, we have improved capacity. We have some lower input costs. We're going to pass some of that on to customers because they want to stoke demand, and also because, they're tripling production sometime next month. They're going up to 150,000 units from about 50 today. So they really want to generate the demand and get those customers into the brand.
But they're not profitable, right? I mean, a lot of these EVs still have negative EBITDA margins. So does this make it worse? If demand is not a problem, why are they cutting prices?
Well, the concern, as you said, Sarah, is that the automakers like Ford and GM, et cetera, they may have to sacrifice profit margins to compete in the EV market, despite, as you said, they have negative margins right now for the most part. But in the same token, in the auto industry, it's all about scale. You have to build up scale so that you can work on cost reductions, get efficiencies. So it's a little bit, the term, kind of invest to reap the benefits later on. So they're going to want to drive up the production. They want to learn those lessons learned to reduce the costs going forward and improve their profitability and apply them to their next generation truck, which is coming out in the next 2 years. So, this is an investment period for them. And when you're starting in a new market in this huge transition to EVs, they've decided to, that's part of the investment that they're making here.
Although, Mark, we've talked about obstacles to adoption in the past. Gas is down $1 a gallon year on year. There's ongoing charger anxiety and range anxiety. And there's even this notion that classic pickup owners are hesitant or reticent to make the leap. I wonder, do any of those hold water with you that would suggest the adoption curve needs to be more shallow?
Well, this is one where I've said before, I think the auto industry is ahead of the curve in terms of consumer preferences. They're coming out with a lot of EV products in the next 6 to 12 months. The issue is when it's about early adopters, folks that have 2 or 3 or 4 cars. You've seen some good adoption. Now you're getting to mass adoption. And Carl, to your point, this is where people get down to brass tacks around what is it going to cost me versus an internal combustion engine? How am I going to charge it? What's the convenience? And I think the moment of truth for the industry is coming, because you have, with the price cuts with the F-150, you got the F-150 Lightning in a pretty good sweet spot in their starting price that people can afford versus internal combustion engines. And you have a new Chevrolet Equinox, which supposedly is going to be priced in the $30,000 range. So when you take away the price issue, then it's really going to come down to, are people going to adopt this and live with the fact that it's harder to charge, takes more time, less convenient? We're going to see that play out in the next 6 to 12 months, and it could get very ugly. Speaking
of auto margins, Tesla out after the bell today, and We haven't heard as much about price cutting there, but they did it a lot earlier this year. Has that been successful, and what do you expect to see tonight?
Well, Sarah, as you know, Musk said, listen, he was willing to trade higher volume for lower profitability. And listen, that price cut strategy has been successful from the perspective of driving volume. You know, they had record volumes in the second quarter. They still sell 6 out of 10 EVs in the U.S. The question that everybody's going to be looking at earnings is their gross margins, and not only the impact on their margins today, but what does it mean for going forward? And you know, last quarter, their margins, their automotive gross margins were below 20%, which they said that was their watermark. So they're going to be looking at that. And then, you know, investors and consumers are going to hear news about, are they going to come out with a fresh Model 3? Where's the next generation model, the Mexico plant? And then finally, what are the plans for shipping the new Cybertruck that they just started producing?
Although some, Mark, who say, you know, maybe brace for disappointments on any of those buckets, always say they could always rely on comments about AI and what full self-driving is going to get you in the longer term, and that remains the bull narrative.
Yeah, I think, you know, Carl, these days, if you have a company, all you have to do is put .ai at the end of it, and your stock gets a bump. You know, in Tesla's case, when you look at the stock run up, and it's up, what, almost 60% in the last quarter, you know, they posted strong production and delivery numbers. They did the charging deals with the OEMs, the established OEMs, to use their supercharger stations. As you said, the overall run up in AI stocks, and for Tesla in particular, you know, it's around this AI-based kind of self-driving software that they've been touting. And I think that's a big piece of what's driving the valuation of Tesla right now. Now they have to start delivering on it.
What do you think of the Cybertruck? I had a debate with friends over dinner last night about whether people would buy it and how important that is to Tesla's future.
Well, you know, they're going to have limited volume of this, but, you know, Sarah, in the auto industry, there's truck buyers that fall into two buckets. One is the folks that really want the capabilities of the vehicle, you know, payload, towing, that kind of thing, the functionals. Then there's the other kind of buyer, which we call the lifestyle buyer, which they're buying the truck because, you know, it portrays them in the way they want to be portrayed. I think this is going to be very attractive to those buyers and those that can afford it. And when you look at the volume, which they really haven't talked about it, but it's probably going to be fairly limited, that will, I think, give them the opportunity to price it. And listen, at the end of the day, it's an incremental product for their brand, and it helps build their brand even more. And they're the leader in EVs from a brand recognition standpoint, and the Cybertruck will help in all those elements.
I feel like the lifestyle buyers will be into it. I mean, it's cool. Mark, thank you. I appreciate it. We'll see what happens tonight. Mark Field.
Coming up later this hour, the housing data continues to show a mixed picture. Starts did retreat in June, permits down more than expected, but refis jumping, and sentiment, as you know, has been rising. We'll get a real estate reality check with the CEO of Redfin still ahead.
Plus, watch ASML upping full-year sales outlook, saying China demand remains strong, but the stock is lower as the Dutch company is caught in the middle of the U.S.-China trade issues when it comes to semiconductors. Stay with us. European markets closing in just a moment. We're seeing green across the screen mostly, with the FTSE seeing the biggest gains in the UK. Financial services and British property names are up the most over there. And those moves coming following the big story abroad today, which is all about that inflation read that we got out of the UK. 7.9%. So falling below the 8% level and hitting its lowest level in more than a year. The prior number was 8.7% in May. So it did show a big drop. And the first time in 5 months that the headline reading came in lower than expected. All psychologically important here. The pound and British gilt yields all fell on that number, a 2% rally in the FTSE, Carl. It reminds me of the days when we first started to see some real moderation in our inflation numbers several months ago. So they're several months behind us, but good to see it not still going up, coming in below expectations, and reviving hopes that the Bank of England won't have to do quite as much.
Right.
There's still work to do, and they're still way above target, obviously, and way above the U.S. and Europe. But it's coming down.
Yeah, but it hasn't done anything to knock off the expectation of further hikes.
No, there's
no.
Of
course.
Market still bets on further hikes from BOE, but maybe they don't have to do doubles like 50s, and they can do 25s.
Right, which has been the call last couple of weeks, at least from a couple of different banks. Let's stay overseas. More Americans are shifting their luxury spending to Europe. Robert Frank's watching some of that trend. Hey, Frank, Robert, good to see you.
Good morning, Carl. Luxury stocks taking a hit this week on fears of a slowdown in U.S. spending. It all started Monday, as we talked about, when Richemont reported that 4% decline in U.S. sales. Yet America's luxury losses may actually be Europe's gains. Analysts say wealthy Americans who are vacationing in Europe this summer may be buying their luxury goods in Paris, Rome, and London rather than the U.S. Sales tax data showing that spending by Americans nearly tripled in June. Bernstein analyst Lucas Sokos saying, quote, Americans remain the highest spending nationality and the fastest growing spenders in Europe. U.S. consumers again led the rally and continue to show a strong appetite for both travel and luxury. We actually saw a similar shift last summer when LVMH, Richemont, and Burberry all reported big gains in Europe, mainly from American tourists. LVMH reported at that time a 36% jump in Europe in its third quarter. That compared to only 11% growth in the U.S. Last year, remember, the dollar was at parity with the euro. As Sarah remembers, that made for some really good discounts. This year, of course, the dollar is a bit weaker, so we're not going to see as many bargains on those Louis Vuitton bags, or there's Hermes sandals with the H on them that everyone seems to love this summer. Guys?
Speaking of, Robert, I wanted to throw out Kering, which is a big mover today, the luxury maker in Europe, after they ousted the Gucci CEO, the guy who was responsible for the whole brand refresh and the resurgence of the Gucci brand, which has fallen stale. I was curious about your reaction, because now there's some excitement that he's out.
Yeah, there's some excitement and some hope that maybe they can turn that brand around. Remember, Tom Ford famously turned that brand around a long time ago. And in the past few years, it's been a tough slog for them. And that's been weighing on Kering's results and their growth. Now I think shareholders are hoping that with the new executive leadership team, they can put something together. But that has been a brand that hasn't lived up to its past potential in the past few years. And it's a very well-known brand with strength both in Europe and the U.S.
Yeah, huge part of that. I mean, and that has been really left behind in the rally with LVMH and Hermes. It's the cheapest
Absolutely.
PE in European luxury.
Yeah. Still waiting on Asia Pacific, too. Robert, thank you. Robert Frank. Let's get a news update with our Pippa Stevens. Hey, Pippa.
Hey, Carl. North Korea has not commented on the status of the U.S. soldier who bolted across the border yesterday. But we're learning new details of how it all went down. A woman in the tour group says Private Travis King made a break for the border as the tour was ending.
Suddenly I noticed a guy dressed in black, running what looked like full gas towards the North Korean side. And my first thought was, what an absolute idiot.
Donald Trump lost his bid for a new civil trial against writer E. Jean Carroll. A federal judge rejected his request, saying the jury that found Trump liable for sexually abusing and defaming Carroll did not commit a serious miscarriage of justice, as Trump claimed. The jury awarded Carroll $5 million in damages. And Las Vegas police officials say officers executed a search warrant yesterday at a home in a Vegas suburb in connection with the investigation into Tupac Shakur's unsolved murder. But the department would not provide any details about who owned the house or what led to the search. Tupac was gunned down in a drive-by shooting near the Vegas Strip in 1996. Sarah, back to you.
All right, Pippa, thank you. Pippa Stevens. Up next, Benchmark standing by its sell call on Netflix ahead of earnings. We're going to talk to the analyst after the break.
Plus another day, another downgrade of AT&T. That's the third in a week. This time from Argus, going from buy to hold. The stock is rebounding today, though, as the company responds to the journal's reporting on that lead sheath cable. You can read more about that on CNBC.com. We're back in 2.
More deal news. VMware up this morning as the UK Competition Board provisionally approves its deal to be acquired by Broadcom. Deal now just needs approval from the U.S. and the FTC, which has been challenging lately, but stocks making a move higher. VMware up 5.5%.
Yeah, M&A is such a huge part of the conversation this morning. Speaking of which, let's get post to post with Bob Bassani, see what else is moving. Hey, Bob.
You know, the S&P is up 7 out of the last 8 days. This is a very powerful rally, and it is indeed broadening out. And the most heartening thing, if you're a bull, to see is the banks starting to participate. Remember, we're getting the earnings. They're not selling off. This is very traditional to happen, but not anymore. I've been knowing these super regional banks. U.S. Bancorp is the highest level since March with the banking crisis. It's the same with all the super regionals. Zion's been moving up. Key Corp been moving up. PNC's been moving up. No sell-off on the earnings reports. That's very, very bullish here. Not a lot of new highs. I would have to say fairly modest, frankly, given the powerful move up in the S&P 500. But we got a small group of tech stocks. There's Salesforce, a big help in the Dow here. New high for that. Meta's at a new high. Netflix, Adobe, ServiceNow. Small groups of them, new highs, and that's encouraging to keep that going. There's a small group of industrials that have been hitting new highs consistently every day. They're not today, and I don't quite know why. So here's Eaton. This is a very typical example. It's been at new highs almost every day. Ingersoll Rand, Carrier, Parker Hannifin have been strong. The steel stocks have been strong. They sort of run out of energy today, but only fractionally to the downside. So finally, I want to point out we're waiting for a big IPO to open. The best thing that can happen to an IPO market is an up market, which is exactly what we're seeing. We're waiting for Oddity Tech to open. This is going to be on the NASDAQ here. This is a consumer beauty company. It's an Israeli company, very interesting one. 12.1 million shares at 35, but this thing was upsized rather dramatically. The prior price talk was just 10.5 million at 32 to 34. So they're going to raise north of $400 million. Now, this was just getting ready to go as I was coming on the floor. I don't think it's quite opened yet. Has it opened? I can't quite see that from here, but we're not yet. Okay, so we're waiting for it to open, but this will definitely open on the upside. It's just got an awful lot of momentum behind it. So, Sarah and Carl, this is another sign that the IPO market is reopening again. You need strong market, up market, stable interest rates. So far, that's what we're getting. Guys, back to you.
All right, Bob, thanks. A lot still to come this afternoon and tonight. In fact, a note catching our attention today is about Netflix reporting after the bell. Our next guest is raising his target to $293, but keeps a sell on the name with an eye on future impact of strikes across the industry. Joining us this morning is benchmark analyst Matthew Harrigan. Matthew, great to have you. There's been so much conversation about expectations on the buy and the sell side going into tonight. The argument is that on the sell side, at least, they've gotten a little overheated. Would you agree?
Absolutely, this has gotten overheated. I think that Netflix is in an advantageous position relative to the other studios, given the sizable international production, which does have some appeal in the U.S. and a good backlog of shows. But I think this is behaving like it's a category killer tech stock, and I think that at heart, this is really a media stock that's subject to a number of issues that beset, the industry. I think the way to look at this in terms of the TAM opportunity is really the overall TV market, which continues to be challenged both on the subscription and the advertising side. And we haven't been perma-bears on this. I had a buy on this a few years ago when they really jacked up prices. We had a sell going into the collapse last spring. Clearly, I should have been more agile in upgrading this. But I do think that at this level, it's fairly heinously overvalued relative to the underlying business.
To the degree that a strike is one of these dynamics that could impact it, what do you say to those who are trying to thread out the idea that their production relative to peers is highly international? They're able to monetize things that come out of, say, South Korea. That would create ways to keep them immune from a labor work stoppage.
Well, I think Netflix is really to be lauded for taking the international content into the U.S. and having a global hit like Squid Game. But I don't think it's sufficient. I mean, people are not going to live on a diet of South Korean dramas or German, horror epics. And really, I think a number of their near peers, I won't call them peers, but even Peacock, certainly has sports and news, which won't be disrupted by the strike. So I think that, relative to other studios, they have some advantages, but it's going to be really bad if this is a long strike. And it does look like it's going to be a long strike, and it's certainly going to be disruptive to what's in the hopper for 2024.
Has Netflix ever traded like a basic media stock?
You could argue last spring the market was certainly becoming more realistic and looking at the gap versus the peers. Right now it's trading around 28 times EBITDA, so it's really at a fairly crazy premium to when you look at a Comcast or Disney, certainly.
But it's not dependent on, not yet, on ads like they are. And, the whole first mover advantage into streaming that everyone had to chase, that was the bull case. And then the further bull case is that the market's bigger than everyone thought because they're cracking down on password sharing.
Well, I think that the password sharing and the entry into AVOD initiatives are absolutely vital to justifying the valuation. And we actually have that embedded in our forecast. I actually have them adding more customers than consensus next year, around 21 million. And they are going to be subject to the advertising market when you look at the emphasis on AVOD, which is going to be how they're achieving a lot of the subscriber growth to complement the crackdown on password sharing. So they're going to remain a leader. I mean, this is a great company, phenomenal execution. But I still think years ago, this really was more of a tech company. They had a really decided advantage in the quality of experience relative to their peers, much more programming. And clearly, I think this is probably kind of an 80-20 media versus tech company at this point. I mean, everyone else can, pretty much do the same thing that they're doing on the streaming side. It's just really a matter of content creation and what you have, to back that up.
Yeah. Whether it's streaming or EVs, a lot of the sandbox is getting shared a lot more than in prior years. Matthew, we'll see what happens tonight. Thanks.
CEO of Redfin coming up on the other side of this break. Average weekly mortgage rates sitting near their highest level since November 2022. How much longer can the market hold up with another potential rate hike around the corner? We're back in 2 minutes to talk housing.
Quick check on Constellation Brands, the maker of Corona beer, higher after appointing 2 new directors to the board, says it will share more information with activist Elliott as part of a new agreement. Elliott expressing some confidence in the management team, saying they look forward to helping unlock the full growth potential of the brand shares. And it just brings to mind, as Kramer mentioned this morning, how many moving pieces there are, especially in the beer category right now.
Yeah, with Modelo still second month in a row taking the top spot from Bud Light as the fallout there continues. Let's turn to the housing market. June housing starts and building permits out this morning. Both missed expectations, actually showed a decline following strong May numbers. This comes as the average 30-year fixed mortgage rate near 7% again. But our next guest notes that competition is still fierce. Data from Redfin showing just 1% of homes changed hands this year. That's the lowest share in nearly a decade. Joining us now, Redfin CEO Glenn Kelman. Always good to talk to you, Glenn. Welcome.
Hi, good to be here.
It's very confusing what's happening in the market because it feels like things were warming up, but starts and permits were miss.
Well, demand is low, but inventory is even lower. So if you look at the home builder index of confidence, it's up a couple of points. It's the 7th straight month of gains. So the builders are sitting pretty because no one else wants to sell their home. No one else wants to give up a 3% mortgage.
How long do you see that problem persisting? As long as rates stay high?
Yes, although there's some relief in sight just because about a third of the market, 37.5%, have adjustable rate mortgages. So those are going to reset in the next couple of years, you're going to start to see people move. There's also just a demographic bump that many millennials still want to buy a home. I think they're frustrated by the Supreme Court decision on student loan repayments, but they still got to find a place to live.
I mean, Diana Olick emailed me, and she noted that you guys recently reported that bidding wars are back, which does seem a little crazy, because how can people afford to do bidding wars and pay over ask when mortgage rates are so high?
Well, again, it comes back to really low inventory. So this is the second straight month that the list price has been lower than the actual selling price. So I think it's 100.1%, the final price higher than the list price, which is just really unusual when you're in a market with rates near 7%. We've noticed that buyers are really rate sensitive. Even when rates come down 10 basis points, we get more demand on our website and more people touring homes, making offers on a Sunday night.
But are they using all cash when it comes to these prices over ask?
There's a higher proportion of people using cash than before, but many people are still borrowing. I think we're just at this bottom level of the housing market. You're usually between 4 and 6 million units selling, and now we're at 4.2 million units. There's just very little demand, but even less inventory. And so that's created a real crunch. The problem for us, obviously, is sales volume. But for buyers, they're still trying to find a place to live, and it's hard to do because there's so few homes for sale.
Meantime, Glenn, you know, the wave of migration that we saw during the pandemic and the effect on cities like Austin and in the Southeast, I just wonder if you're seeing some reversion to the mean on that front, whether that's in rental prices, for example, or even just migration numbers outright.
Rental prices are taking a step back, but very slowly. We have seen just incredibly strong demand for Arizona and Florida. I know it's been over 110 degrees there for a month. Florida's got all sorts of climate-related concerns, especially since insurers are leaving the market. But that's where people want to live. Much of this is just fleeing to lower tax places. That is a long-term trend that isn't going to stop.
So what's going to happen with pricing overall, rentals and sales, which we know the Fed is paying very close attention to and makes up such a big part of CPI?
Well, it's a tale of two markets. So on the purchase side, I don't think prices are going to come down much. Sales volume will. On the rental side, we do expect rents to come down. Vacancies are up. The builders have been very busy creating new apartment buildings that property management companies have to fill. It's been a real challenge for them because household formation, isn't happening the way it used to. More people are living in mom's basement.
So is it changing? But you mentioned that the demographics are changing such that there's going to be demand from younger buyers.
Yeah, well, eventually these baby boomers are going to give up the ghost, sell their homes and downsize, and the millennials are going to take their place. That process is just much slower. If you look at the proportion of wealth owned by millennials at this point in their lives versus where it was for my generation versus where it was for the baby boomers, millennials are just not getting into the game because of student loan debt, because the ladder just came up on the housing market at the worst possible time where inventory was low and rates got really high as they came of home buying age.
It's really interesting, all the cross currents happening right now. Fed can't control everything in this market, I think is the bottom line. They try. Glenn, thank you. Glenn Kelman.
Thanks for having me.
Yeah. Thank you.
We want you to control egg prices and the birth rate in this country. Yeah.
Right. Good luck.
That's a big job for a committee. After the break, Carvana surging this morning on the back of that debt restructuring deal. We'll look at that move and the other so-called left for dead stocks that investors are piling back into. Don't go anywhere.
free consultation.
Shares of Carvana will get your attention, soaring after striking a deal to reduce its outstanding debt by more than $1.2 billion, part of a surge in unprofitable businesses that have been rebounding recently. Deirdre Bosa digs into that today in Tech Check. Morning, Dee.
Morning, Carl. You're right. There's signs of new life this year, and those pandemic high flyers that some investors have pretty much left for dead over the last year in 2022. This is a class that includes Robinhood, Opendoor, Affirm, Coinbase, Peloton, Carvana, you mentioned, different business models, but all characterized by weak financials and high valuations. Their story is often told in one chart. You're looking at it, their 5-year return versus the S&P. The S&P being that far more steady purple line, up with the 21 tech boom, down with the 22 tech bear market. Now, one of our colleagues, I remember, once called it Pandemic Mountain, so that's how I always think of it these days. Many of them have been staging a comeback this year. If you take a shorter-term chart, Carvana shares, they have jumped tenfold this year. Coinbase shares have tripled on regulatory optimism. Opendoor, despite still higher interest rates, it's up more than 250% this year on signs of a housing market recovery. But guys, we always go back to the fundamentals, as we did in 2021, and not much has changed. These companies are still unprofitable. In the case of Carvana and Coinbase, revenue is falling. And while today's Carvana news, sure, it relieves the looming cash crisis, but it also dilutes investors and ultimately raises interest expense. And the metric, I want to flag this, that Carvana has been pitching to investors, been using more and more, gross profit per unit. Feels like a throwback to the adjusted EBITDA days when companies wanted to distract from heavy GAAP net losses. We know how that movie eventually played out, guys, but it's all feeling very 2021 again. I know you guys saw the Journal article that says the market looks a lot like 2021, right before stocks entered a deep slump. And I guess that's the question many are asking. Does it play out the same way as it did a few years ago?
I mean, it does jibe with some of the latest surveys on retail investors and their enthusiasm and how they've been jumping back into the market and they're getting more bullish than they have been. I'm just wondering, the difference between now and then, the private market that you follow so closely, Deirdre, was on fire at that time.
Yeah.
And since then has had a bit of a correction. Do you see that kind of animal spirits there too?
Absolutely. I mean, the private market usually lags the public market. So what we're seeing right now is what many are calling a VC winter. You're seeing fundraising really just kind of freeze up. A lot of startups are having more trouble finding that money, whereas a few years ago, right, there was so much of it. You just had to kind of hold out your hand, and it's really the founders that held the power, and the VCs were all vying with each other in this competition to get into the deals. The exception, which I know I talk about a lot, is the generative AI space. Money is still flowing very freely. You're seeing $100 million Series A rounds, which is very sort of bubbly-ish territory back in 2021. But the rest of the environment for other startups not in that space, certainly the air has come out of that bubble significantly. But it's amazing what you're seeing in public markets. You have to wonder if you're going to see the private markets follow.
Also curious is, we keep talking about green shoots. We keep hearing about it from certain financials regarding M&A, but also IPOs. And I wonder if the discussion about exiting is getting a little more traction, at least in the Valley where you are.
A little bit. I mean, I talk about these companies, I call them unicorn dinosaurs because they've just been private for so long. I'm talking about Stripe and Instacart and Reddit that maybe missed the IPO window a few years ago. Instacart, remember, it filed confidentially and then it pulled it. There's this thinking that it's going to have to go in the next year or so, and certainly the public markets have created an argument for that. But the business model, right? It's not the really splashy, sexy, generative AI business model. This is gig economy, which still is unprofitable in many cases. We don't know what that looks like with Instacart. And you hear that it's profitable, but to what extent? So I'm not hearing that there's any rush to get these companies out. ARM will be an interesting test because we know that SoftBank and Masasan wants to get that one out. And it does play more into that generative AI hype cycle.
All right, Deirdre, thank you. Deirdre Bosa. Wall Street is buzzing about Lina Khan and the FTC. A lot of deal news to get to this morning, including some new regulations that the government has put out. We'll tackle that when we come back.
FTC.
U.S. government, FTC, and DOJ today outlining new rules to evaluate mergers in a changing digital economy. They include assessing the impact of a deal on competition for workers, for instance, and looking into how a series of acquisitions could affect the market. FTC Chair Lina Khan joined us last hour to discuss some of these changes. Here's what she said.
We consider every matter on a case-by-case basis. Our obligation is to preserve competition and make sure that mergers are not unlawfully lessening competition. If parties are putting before us remedies or potential packages that they claim would do that, we look at that very closely. But at the end of the day, our job is to protect the public, and we need to make sure that the public is not bearing the risk of a failed remedy.
Updated guidelines come, of course, as Microsoft and Activision agreed to extend their deal deadline to October 18th, and her FTC lost a key court battle to block that deal. She was somewhat defensive, but trying to lay out why she thinks the rules are stale and need to change. Of course, the Republicans and the business community will push back.
Yeah, as they have. I mean, some of the things are interesting. Partial ownership or looking at your track record of acquisitions, not just a specific deal. Very much reminiscent of the hearing that she got in front of the House just a few days ago.
Oh, yeah, 4 hours of grilling on that one. Meantime, the rally rolls on. Mike Santoli has come bearing gifts. Because we're now above 35,000 on the Dow.
You've had this
at
my desk.
You want to do this?
For about 15 months or so. We have cracked above 35,000 today for the first time in a while. I think it got there late 2021. We spent parts of a few months above 35,000. I think you did put it on.
I did put it on, and then what happened to the market?
Well, we didn't have too long before the market went south. But it wasn't
should I
immediate.
put it on or
wasn't.
not
I'm not going to claim that there was any causation.
I don't want to jinx anything.
Yeah, a lot of big round numbers. What if we get Russell 2000?
Yeah, 2000. That was always a big barrier out there. So clearly 48 on the S&P is when everybody's watching. But we're within like 5 to 7% on all these indexes. Looked at the New York Stock Exchange Composite as well, which we don't know.
How many days after I put on that hat did the market fall?
It wasn't days. I think it was actually a couple
Minutes?
of months.
Oh, okay.
No. It was a couple of months. But we didn't make too much upside after it is the point. Yeah.
All right. We miss our cash in. He would always put it on.
Yes, we'll get him back. Let's get to Post 9 and the Judge.
Carl, thank you very much. Welcome to the Halftime Report. I'm Scott Wapner. Front and center this hour, the march to new highs and whether the investment committee thinks we can get there or not. Stocks are on the move again today, sitting about 5% now away from a new milestone. Joining me for the hour today, everybody's here at Post 9. Joe Terranova, Jenny Harrington, Jim Leventhal, Brian Belsky, BMO Capital Markets, of course, Chief Investment Strategist there. Check the markets. We're green across the board. As I said, there's the Dow above 35,000, S&P 500, 4574. Almost 0.5%. NASDAQ having a pretty good day as well. New 52-week highs. Jimmy the Bull. That's what I called you before we came on the air. So new 52-week highs for all three of the majors. Jonathan Golub, Credit Suisse, raises his price target to 4,700. It's the highest on the street. And you, I see the notes here, look a little less bullish today relative to kind of where we are, where we've come to. And you say it's time to trim some stocks.
Yeah, I don't want to give up
true?
that. I don't want to. Well, yes. I don't want to give up that name though. I think it's
Jimmy the Bull.
Yeah,
I love it.
Are you still an Uber bull?
I am. But look, let's respect where the market is, right? I mean, I can say that with a chuckle. We can all kind of chuckle and say this market's gone straight up. Did you give the number of days it's gone straight up? I mean, usually you do.
It's like 7 days in a row.
We're up 20% on the S&P 500 year to date. This will give something back. This does not change my overall bullishness on the economy. It doesn't change the fact that the labor market's strong. We've got supply chain onshoring, infrastructure spending, all that sort of stuff. But we are likely to have a 5 to 7% pullback. It may take as long as September, which is normally a very tricky month. Or it may happen before then, but you have to have some dry powder ready when that happens. I hate the thing where you write it down and then you say, oh, I'm selling this to buy that. No, I'm going to raise a little bit of cash here. I do think it's time to do that.
All right, we'll talk in a minute in one place that you're raising that cash. I don't want to do that quite yet. Brian Belsky, I mean, your bull case is 5,050. Your year-end target's 4,550. I mean, we're right there. So when you hear Jimmy say, look, it's probably time to take a little off the top, what's your response to that?
We would agree on a short-term basis. I think, much of what has happened has already happened, right, in terms of the stock market kind of catching up. And I think investors are kind of chasing things here a little bit that have not been invested. I think there's other areas of the market to be invested in as the market begins to broaden out here. Not just financials, not just other cyclicals, not just small cap. And I think the summer months could be bumpy. Remember, last August was pretty bad, and then heading into the fall. So I think we could get choppy. But
last August was different than this August in terms of sort of where we are in the Fed cycle and what we're potentially thinking the economy could be relative to what we thought it might do.
Yep.
Almost a year ago.
Yep. Exactly. And so I think that we're going to get an opportunity. I don't think 5 to 7%, maybe 3 to 5%, because I think there is still an opportunity for investors that have missed this move, Scott, to get in, kind of number one. Number two, I think people are still way too focused on the market overall and kind of missing the fact that we're in the midst of, I think, one of the greatest stock picking environments that I've seen in well over 10 years, because dispersion in terms of where stocks are trading on a performance basis, on an earnings basis, and on a valuation basis are all over the place. That means fundamental bottoms-up stock pickers. This is the type of area that you want to be in.
All right. Is the air getting a little thin, as Jimmy would suggest up here? Now, we don't necessarily have what you would term, animal spirits or this euphoria in the market. The market doesn't feel like that. No. But it does feel like it doesn't want to go down, and that you do have a growing chorus of people who are getting more bullish, and that to some is a bit concerning.
It feels as if the momentum is building to almost go parabolic in a sense. And I think at some point we will go parabolic.
Like a blow off top.
Yeah, I think that'll be a near-term peak. And concurrent with that, you'll probably see the VIX actually rally because people are reaching for calls. Listen, I've said numerous times on air over the last several weeks that the third quarter has the highest probability to be the weakest quarter of the 4 quarters in 2023. But here's a remarkable statistic. Jimmy, what'd you say, 6% down you thought possibly? 5 to 7. That only gets you to the 50-day moving average. That is remarkable. The 50-day moving average is at 43.11. The 100 is 41.76. The 200-day moving average is 40.43. So there is a lot of air underneath the market, but I do believe any type of significant correction will be greeted with a tremendous amount of buying interest, in particular because we have that mega cap put. Completely agree.
What's your view, Jenny?
So I think we're talking about different things, right? And so I'm listening to all this conversation, and everyone's talking about the market. And what's the market that Joe and Jim and Brian are talking about? They're talking about the S&P 500 that has 30% of its weight in 7 companies. And I'm thinking about my market, right? My dividend-oriented, which is kind of value-leaning market. And that's really different. So I haven't, and then when Brian said it's a stock picker's market, and that's because dispersion and valuations are all over the place. So when we're talking about like the market pulling back 5 to 7 or 3 to 5%, like, who cares? It's all in the same realm of pullback.
You've had to be in the right, quote unquote, right part of the market to have had a good first half of the year.
Totally.
You have
right.
to have
and
had.
I haven't been there, right? So if you look at what dividends did this year, dividend indices and dividend ETFs and stuff were up about 9% at the end of January. And then they had that pullback. So they were kind of flat. I mean, maybe they're up like 2-3% on the year. Actually, at the end of the quarter, the Dow Jones dividend index, high-yielding dividend index, was down 2.5%. So now I'm looking at this thing like, okay, I don't really care what the broader market does because I think the setup for me is fantastic.
You think there's going to be a comeback in the area that you count as your wheelhouse?
And that goes back to Brian's point on dispersion. And so when you're saying, is it time to trim, I'm thinking to myself, you know what? I trimmed earlier in the year. I trimmed AbbVie. I sold AbbVie, Chevron, Unum, Navient, Foot Locker. I took money off the table because earlier I moved up. And so this is where it is truly a stock picker's market. And I think there's a ton to do because things aren't moving synchronously, right? They're very asynchronous. So you remember in the last month and change, I've added Whirlpool, Stanley Works, Organon, Crown Castle. I don't even know why I said Citi. So I listen to the conversation, and I think that applies to one piece of the market, which is the S&P 500. If you're in small cap, if you're in value, if you're in dividends, if you're in mid cap, if you're in international, you're playing with something that's different that hasn't had this plus 20% slightly stretchy valuation move.
I don't know, Jim. I see you trimming or selling Goldman Sachs.
Yeah.
So I teased it for a moment ago that's where you're looking to take some off the top. When I saw that move, I was like, It's an interesting move to me because there are those who would suggest that now's the time to buy Goldman Sachs, not sell it.
Yeah.
Right? You're selling it at what some would suggest is the bottom.
Well,
take me through it.
First off, yeah, I mean, this is important to know my personal perspective, which is I bought the stock at the very end of March of 2020. So when you look at that return from 2020 till now, it actually has handily beat the S&P 500. So I've got a big gain here, and I'm happy to take that gain. I'm not happy with what I see there. Now, we can talk about the macro environment. We can talk about the industry specifics. But it's unassailably true that Morgan Stanley is just whooping the behind of Goldman Sachs. And I don't want to get on the air and defend that. And I don't want to talk to clients and defend why Goldman Sachs and something else. And if we get a pullback, now I've got some dry powder that I can do anything with. Maybe Goldman Sachs gets its act together. In a few months, I want to get back into it. Maybe Morgan Stanley pulls back and I get in there. But I have to have a little bit of dry powder here. I do want to make one more general point here, which is that we are talking about trimming the portfolio overall. This is not a wholesale move into cash. I think that would be foolish. I think, the last 9 months have proven that if you make wholesale moves into cash, you run the risk of just being out when the market, because of its own animal spirits, catches a bid here.
But Steve, why would you though? I want to press you a little bit more on this Goldman move, because, if you think you're bullish on the economy,
yes,
right? So theoretically, if you're bullish on the economy and you're bullish where we are in the cycle, you would then think that there would be a coming pickup in the capital markets type businesses that Goldman Sachs kicks everybody else's can in, right? I mean, it's the deal making, which is their bread and butter. IPOs, M&A.
I don't like
if that area is troughed.
Yeah.
Why would you want to sell it now?
Because it's a market move overall. But to your specific question about Goldman Sachs, I don't like a company that beats on revenues and misses on earnings. I don't like that. That screams to me of expenses are out of whack. Let me be clear about something. And also, look, we have this lingering question about the leadership at the top. I just don't want to be discussing Goldman Sachs personally anymore. Okay, and others can. That's fine. There's plenty of other stocks, Scott, you'll admit, plenty of other stocks for you and I to discuss that we have a lot of fun with. Let me be clear about one thing. I am not underweighting cyclicals here and overweighting technology. I still believe, and this is to what Jenny said, that the cyclicals, which include financials, of which I still have a healthy holding in JP Morgan and Citigroup, are going to do well over the long run. But for the next couple of months, to Joe's comments about the third quarter, I totally agree. This is when air pockets form.
Let me just point out something too, guys. Can we throw up an intraday on Apple, which is moving right now, on some headlines that I see on AI-related reports? That Apple is apparently building a large language model AI framework, that it's created an internal ChatGPT style bot for employees as well. You could see the obvious move in the spike in the stock here, as anything related to AI developments is sending pretty much any stock that delivers that kind of news higher in what we're witnessing here. So you're almost $200 a share for Apple, which is up 2%. We'll continue to get more on that as we have it, but I didn't want to wait any longer to bring you a headline that was moving the biggest stock by market cap in the marketplace, and it just brings us to what's happening with tech, and how we're really going to get going in the next few days.
So I'm watching. It also turns Nvidia positive on the day as well.
Thanks guys for watching the stream. I'm going to end it there, but Cvna is holding up nice. Tesla holding VWAP. Again, mainly just waiting for the earnings, so we'll probably come back for about 4 p.m. to see what's happening then. Netflix kind of range bound between the VWAP and the first dev on the 1 year. So yeah, we'll check what it is. Again, bonds on the low. Euro looks like we're going to sell off into another low. I want to quickly actually check the crude oil futures. From 10:30. So yeah, we got the move exactly faded on that. So again, that's the same thing. $76.60. Didn't quite come down to the anchored VWAP, which would have been the nicer play. But if we do come down, could still look for a potential bounce off of that. But anyway, I hope you enjoyed the stream. Hope to see you next one, and that's it.